Okay, connect my headsets. So am I audible? Hello.
You are clear.
Okay. So let's continue. Someone can be speaking. I want to hear the volume. So how's the market been going?
Market is still bullying me.
The reverse was it?
Reverse was a serious problem.
Okay. Okay. So let's begin slowly. Yeah, it's good you've tried. You've tried something. I've been seeing some of you guys marking 30 minutes, other people marking 1 hour, other people are marking 15. Yeah, it's because that was just like a small highlight that I gave, eh? But you need to piece up everything. So let's go back to our candles first. Now, before you do anything, you need to first look at the how the candle structure looks like. Yes, I told you you can look at the previous candles, but you need to first look at how these candles are formed out together. Let me give you an example. Let's assume this is a bearish one. So what am I trying to show here? I want to understand the power of volume. Eh? Now, you can see that this is a very big bearish candle, right? Then this is a small bullish candle that has at least maybe a week altogether. It has a week altogether. Why did it go back? Okay, let's do this. Make sure you don't annotate on the screen. Okay. So let's assume we have such a bearish candle, then this is a bullish candle. So what you have to notice sometimes are these bodies are together. The body of this new candle that has come in, or maybe it has finally closed, that has finally closed. Look at the previous one. How did we close? Did we close maybe 50% altogether? Those are things that you need to put in consideration before you try to look for any setup altogether. Then I saw some people doing mistakes in their setups. So I want to correct them today. So sometimes you have to look at this candle. Did this present candle that is green, did it close 50%? Did it close with less momentum altogether? So if it has less momentum, let's assume it has closed bullish. Sometimes this is a big sign that, okay, we may have, as you know, if you remember how these candles are formed, this is a bearish one. When a bearish one forms, creates the high, creates the low, and closes altogether. So the ideology of such a type of a candle closure of this type, it indicates that, okay, price opened, created the low, created the high, but now sellers came within a lot of pressure. Why? You can see they came with a lot of pressure. So in actual sense, if this is your daily, you'll find your setup in the H1 altogether. You find your setup, it may be an H1 V2V altogether. But now taking such a trade with such a candle size, sometimes it's also risky because the wick is long, which indicates that we have strong selling pressure that came in, but again, bulls later controlled and closed bullish altogether. So when this candle comes in, you can decide to take a setup in that H1 altogether, which is risky, and you take the buys altogether. But you shouldn't overhold your buys anyhow altogether because price can decide to stop here and decide to say, because you shall always find out that sometimes in this week you shall find sometimes areas of liquidity that weren't mitigated and price continue bearish altogether. But if we have such a scenario, if you have such a scenario, let me show you. You have to look at the volume, the strength of that candle, how it has closed. Now, if it has closed like this indicates we have strong bulls in the market altogether. We have strong bulls in the, we have strong bulls in the market altogether. So this one indicates that, okay, we shall have maybe this price came, opened, created the low, quoted the high and close. So that means you can look for area of liquidity that is resting here altogether. Now we shall also go into the area of liquidity that you should be looking at. Now, so most of the time, look at the volume of how these candles are closing above each other together. If it has closed like this, almost close to the opening, that's strong momentum altogether. This is strong momentum. Keep that in mind. So if it closes like this above, this is also strong momentum. So there are also some scenarios that you'll be noticing in the market. I think you've also been seeing them. Sometimes you end up seeing like this is the daily candle, or maybe any time frame of your choice. Remember, you guys are going to learn on also how to trade those 4-hour candles, how to trade the daily candles, how you're going to trade the weekly candles together. You trade them like professionals together. So there's where we trade the H4, there's where we trade the H1, there's where we trade the M15 candles together. So you can have such a type of a bullish candle. Then, but if you notice that this bullish candle we have here, let's assume it's in a continuation trend. Price has left an area of liquidity. Maybe this is a daily candle altogether. This is a daily candle. So remember, in a continuation, we said we mark the close and we also mark the low. Be attentive here. Now, let's assume this is a daily candle. Now, go notice that sometimes this daily candle, a daily candle that comes in, another daily candle comes in maybe here, stops here, fails to close above the candles wicks altogether, fails to close above this candles wick. Watch close above the high. Let's assume it has failed to close above the high. We're going to notice this type of scenarios. This is a daily candle. Now, this candle has also closed, but this is a daily candle, and maybe it has a candles wick. Now, you're going to find out that maybe it has mitigated here inside a 4-hour, sorry, maybe a 15 minutes V to V, or maybe sometimes a 30 minutes altogether. Observe. Then maybe another candle, then the candle comes in, sells. You're going to start seeing this type of scenarios. This one can also happen in a continuation. Then later, maybe another day, the candle comes in and happens to tap at some point. Remember, these are like 2 days. Price is failing to close above this week. Now, this one indicates that, okay, by price failing to close above this week, the bull power is low altogether. So when price starts to retrace, it's like price sweeping liquidity on this high. You understand? It's more or less like ICT stuff. So when the candle starts to sell, but remember, even here, I can decide to capitalize on the sales here. If this is my daily candle, now you're going to notice that price is going to come back to some H1 V2V that is here. And that's when you find maybe the next day price is going to buy. Now, in actual sense, if you observe, it's more or less forming for you a V2V altogether. But remember, even this selling candle to come in, it is either mitigating maybe some 4-hour or 1 hour here. Remember, this is a bearish candle opens, creates the low, and closes. Are we together? Then this one comes in, opens, creates the high, low, and closes. So as it is starting here, maybe you could have had here a 1 hour shift. Are we together with an inside formation? All together. I'm going to show you those chart examples. Then this other daily candle comes in, right together. So this one can happen not until we later see price closing above this week, right together. You just know that price is now buying. But remember, this can be a daily candle, but here inside I can cite even the 4-hour and the H1 candles for continuations. When you're stacking in, we shall see that how we do it. Then that's when you see another candle maybe coming in, also maybe another daily candle. You start seeing such type of scenarios. This cannot even happen. This one even can happen in weekly, in monthly, or together. Then maybe find here another candle, maybe to week 10 somewhere here because maybe the daily area of liquidity is here. So now let's go specifically on how to trade the intraday. I've been seeing some of you struggling together. So let's first go. Now, most of the time, first look at how this candle closed together. Before anything you do, first look at the higher time frame before you do anything together. First look at what is the monthly speaking. We could be on a monthly support altogether, and price is likely to start shooting up high altogether. Or else we could be on a weekly support, or else we could be on a weekly resistance. Before you do anything, first look at the weekly and monthly. What are they speaking? if you want to do proper intraday, because price could be getting back here inside. So here I can decide to use the daily candles. If this is weekly, I can decide to use here the daily altogether to do my intraday, because I know price is getting back here inside. So I can use the continuations for daily, or I can use weekly continuations together. If I don't want to use, because this can be a weekly area of liquidity, but weekly candle for it to close, it will take a lot of time altogether. But here I can decide to use the daily. It will go back into the weekly. Even though this is monthly, I may not wait for weekly candle to close because it will take a lot of time. I'll be missing opportunities. We shall see that in the chart examples. So that's when I can decide to use the daily continuations. Even when price enters here, I will only sell if I see at least the candle closing bearish. We shall see that under reversals very well. But it's something I want to first finish up in intraday before we do anything altogether. I need first wait here for the candle to close. Then I know that, okay, price is going berserk or it's going bullish altogether. Even sometimes it can be a daily area of liquidity. It is possible, and whereby even daily candles are getting back here inside. Here we can have several daily areas of liquidity. Let's assume this is a bullish one. Price is retracing, going up into its other daily area of liquidity altogether. Then maybe you have here these other daily areas of liquidity. So these are other daily candles, sorry. And we're going to find out that this is when price was dropping. So remember, I'm going to use these spaces for continuations altogether. Continuation. So you mark this low, you mark this high. Find that maybe the candle wicked in here. Price is done. Then you mark this one and this low and this key area. So price comes, marks, yeah, taps into some area of liquidity. Well, because we're going to be stacking here, we shall be entering here altogether. So when price even reaches at the ceiling, we can side even to continue, because sometimes this thing will help you to even break levels, because you may wait here for a bearish candle to close. Unfortunately, price starts to go bullish. Let's make this one green. Price starts to go bullish. As some people are trying to look here for shorts on that VTV point. It can be daily, it can be weekly together. So as I'm trying to look for shorts, I'll only take shorts here if I notice that we have here the other bearish candle that comes in and closes below. Let me show you something. If the candle comes in and closes below this previous bullish one, this one I'll start looking for shorts. And it has to close below this previous open and close. So it's more or less like a gap. Why do we mark this area? And this is how a reversal candle should look like, at least an engulfing. Even though it doesn't close fully below this week, but it shows this bit of a sign, like even if it first close below this week, but at least the body is closing below the previous close of this bullish one and the previous opening of this bullish one. But in actual sense, when price was buying, it was creating here the low. Price came created here the low, the high, and close, right? So even this candle, it was coming in again. It was also creating the low, creating the high, and closing right together. Now, this bearish candle is coming. If you observe, this is more or less like a V to V here. So this indicates now price wants to reverse. So when this bearish candle is coming into, this bearish candle is coming into, price opens with the high, closes below, and price stops here. So you see, this like price is violating this invalidation. And that's how other bearish candles come in. Are you seeing that? Just make sure here we're not on support. If you're in a hard time frame, if this is daily and this is maybe like monthly, most of the time price can decide to sell and maybe later starts to buy, or maybe we find that we didn't mitigate something here together. But if it's just in space, it has also been like a continuation to come and continue lower altogether. Just make sure where this buy came from is not a strong support key level. This is daily and price coming from monthly, and this happens altogether. Most of the time price can decide to reverse from here. We shall see it by time. I think that then price, because here you can capitalize on also those continuations altogether. So here we shall mark this because this is a reversal. So you observe that, okay, price closed here below altogether. Now I'll mark this high altogether and mark also the close. So when price coming back here, here we shall either find maybe like those 4-hour shifts, then price takes down altogether. If this is daily, you can find H1 or 4-hour altogether, then price continues down. Then here we shall use the continuations that are resting in between the closes. So now let's go into deeper. Let's go into deeper about the continuations. Let's make this one color green. I like buying. I don't know why, but I like buying, you know. Even selling, I do sell, but don't be addicted. Don't be addicted to one biasness. Just make sure you follow higher time frame trends. The higher the time frame, the stronger it will be. Even small time frame, sometimes they can produce continuings. You may see buying opportunities in higher time frame, but price is trying to short to some given point altogether. So we are going to have this type of scenarios in the continuation, whereby another candle comes in, but if you take close look, if you take close look, price didn't go deeper, almost like 50 or sometimes 45%, but stop somewhere here. And this candle went high. We have this scenario one. Then you're going to have this other scenario two. This is another bullish candle. And you find out that this candle price wicked in so deep. This is for continuations altogether. This scenario. We have this one. We shall learn how to get trades here. Then we shall learn also how to get trades here altogether. Because this indicates that price has already mitigated and there's a less chance. If the candle closes above this week, this candle going up, then this area that we shall have here, which not yet mitigated, we shall use it in future or may not even come back altogether. But for price coming and tapping a dip here, this means all this area is already consumed. We shall see that in future altogether. This means that you find that if you have here an area of liquidity, like maybe in the 4-hour or day or in the 1 hour, price has already mitigated inside and there's no chance. That's why XEC guys will call this one an overlap, and of course they'll find a hard time frame V2V being formed. If this is there, they'll find a 4 V2V. But for us, we know that okay, this place has no use. Yes, we can even decide also to recapitalize, to take here trade. But for us to take here trade, we shall not just take on the Quasimodo here. No, we shall wait for other candles to form in for reversal candles, then we shall continue with the momentum. I think that. Then for this one, if this candle went and closed above, stopped there, maybe in future, when another candle comes in, it can come in and mitigate and stop going higher altogether. If it does this, maybe if it also closes with less momentum, as we discussed above, this when price would maybe look, we wait for another candle that can come in. Maybe it can come in selling, tap into this area and start to go. It can come in like three candles, 5 candles, 20 candles. It can say to range as just trying to be in this range for this bullish candle altogether. So those are the scenarios. So now let's go into the intraday very well. What do I mean by intraday? So if you take notice that price likes the previous, the previous, the previous or the former daily candles V2Vs, if you've taken notice altogether, it will either like the 4-hour or the 1 hour altogether. Now, I want you to keep this in mind that if I have a daily candle, and let's assume it's in a continuation phase, together. Let's assume yesterday the candle closed bullish. As I told you, first look at the volume. Look at the strength, look at the body size altogether. Look at the body size. Look at the previous day, the candles, how did they close? As again, was there like some bit of struggle? You need to add in some common sense. Is there some bit of struggle? So, okay, if this candle closed bullish, let's assume this is a daily candle. Now we're intraday. We know that daily, you can't fail to, if you're going to use this concept, you can't fail to get at least 50 pips or even 60 pips a day altogether. Price can either activate in the midnight or maybe close to midnight when you're about to sleep. Price can decide to activate in the evening altogether. Price can actually say you can wait for your setup from morning to evening altogether. When price just going to come and mitigate that point. Because this is intraday. Sometimes price can decide to mitigate early morning when you're still in the bed sucking your finger under your bracket altogether. So it can activate at any time of the day. There's nothing like this, the specified time you get. Unless we shall add in the timing concept if you're trading the 4-hour candles, because I love flipping in the 4-hour candles and in the 1-hour candles. When I know that what the price is buying, I can decide to execute in trades and make quick money altogether. Sometimes I see these candles closing like H1. Let me give you an example how to trade the 4-hour. 4-hour, we shall only wait for H1 to close. The H1 candle also closed bullish. 4-hour candles closed bullish. Now, between that 4-hour range, we shall look for the 30 minutes EV to V. If not, we shall look for the 5 minutes. If it is visible, that's where another 4-hour candle will be forming from. Right, together. That's when now you find that flipping is easy compared to back then. Right, together. So after understanding intraday, we are going to learn at something called authenticated areas of liquidity. We have 4 types, and you're going to see them every time when you mark your intraday. We call them the authenticated areas of liquidity. How? How do they look? You can see price coming. Maybe this is your H1, then price quest for 2 inside formations. This is what we call authenticated area of liquidity, which means complicated areas of liquidity. Then we shall also have another type whereby price comes, quest maybe 3, none of them has been mitigated. Then you're going to find another scenario whereby price comes, quest for an area of liquidity, together, then price consumes it maybe like 50%, then goes together. So when it comes to intraday, find that you have to take in one of them altogether, in one of them. It's really interesting, trust me, but let's first understand the intraday to the core before we go into the authenticated areas of liquidity. So if I mark my where's the brush? Okay. If I mark the close, remember this is the previous day. It can be a Wednesday, it can be a Friday, regardless of any trend. Trust me, even though price is saying and this kind of closed bullish, you have to be careful altogether. Because that's when you see buyers coming from nowhere. You think, so where these buyers coming from? Yet price is continuing in a downward trend. It is possible. Then fine for me, I'm taking a small buy at least 50 pips, 60 pips, tolemezaamu nnyo. Okitegeera. Osobola okulemezaamu nnyo, or you can, okay, insist on, if price decides to close bullish, don't overhold your trades altogether. Because even though you say bullish can, maybe say price closed bullish yesterday, you know, don't over insist on a trade that you won't hold it for 1,000 pips. I've been seeing some of you trying to set unreasonable take profits altogether. So you have to look at the previous scan. How did it close? So if it closed bullish, your role is to do this. If this is a daily candle, you have to look for at least an H1. Oh, this is daily. Remember, I want you to keep this in mind. Daily candles are formed by H1 V2Vs. Any daily candle that you know as planet, whether in synthetics, whether in Forex, or whether in Bitcoin. Are you seeing together? Weekly candles are formed by 4-hour candles. Monthly candles are formed by the daily V2Vs. Are we together? Then the 4-hour candles are formed by the 30 minutes or else the 5 minutes. The 1-hour candles are formed by the 15 minutes V2Vs or the 3 minutes V2Vs. All together. So let's go back. So for the best intraday setups, if I'm trading a daily candle, okay, before I go into that, so you know that daily can be formed. But again, you're also going to find out there are some situations whereby you find that some daily candles are formed by the 4-hour V2Vs. I'll show you why. If you notice most of them, we're going to find that sometimes it's the weekly candle forming. that is going to produce maybe momentum. A weekly candle can even decide to form on a Thursday. Moreover, we're in a new week, but a weekly candle can decide to form on a Thursday, which is weird. Mhm. And Friday, which is it has totally closed bullish or totally closed bearish. But I find that from Monday to Wednesday, it has been ranging on some 4 hour V to V. Then later candle comes in very strong, maybe on a Friday. Price by it's just like in Euro card. Even you're going to find out that sometimes even that some of these weekly candles, we know, yes, they can end up being formed by not daily, but even sometimes by 1 hour. It is weird. You will notice it. Don't worry, we shall see it. So let's first go deeper. Let's first finish intro. Let's go slow. Let's first go slow. Now, if I'm trading a daily candle, you have to keep this in mind. I'm going to use 4 hour as a confirmation. Keep that in your mind. I'm going to use it as a confirmation. Which confirmation? FTA. I can use it as a confirmation for FTA, the 4 hour time frame, because we're going to form a daily candle. Or else I can also use it as a V2V confirmation, key point. Or even I can use it as a buffer if I want. Then the 1 hour, we shall use it for the setup. That's when you shall see price waiting for us a V2V that is like a continuation, or maybe a V2V that is like some bit of a shift with inside formations. Sorry. Those are the setups that we shall use. But we shall learn this proper, what we call the authenticated areas of liquidity. This when H1 comes, taps into one of the H1s and price goes. You find that the daily candle is being formed. So no matter what you do, if you have a daily candle, mark the close and the low. Any H1 that is in between here, we shall use it for a perfect intraday key level. And you have to make sure that this H1 is not consumed. What do I mean it's not consumed? We may have this type of scenarios. Remember, let's assume this is your daily candle. If you go to H1, find that H1 is like this. We have maybe this H1 shift inside formation. So when price was going up altogether, it happened maybe to consume this one. So by consume, it has tapped into the liquidity engineering, or it has tapped into the Quasimodo. If it has tapped on the flip, it's not yet consumed altogether. Even though price taps on the flip, it's not yet consumed altogether. It's not yet consumed. The price types, because price to consume itself, it has to tap into the liquidity engineering. It has tapped into the 100% of the V to V point. That's what we mean by consuming liquidity consumption. If price taps only on the validation, this doesn't tap the flip, but I don't tap the liquidity engineering. If it taps into almost 100% of this validation and invalidation, it has consumed this point altogether. So if we have this other area of liquidity that's not consumed than this one, we shall only take one that has at least a 4 hour. If this is H1, we shall only take one that has at least a 4 hour FTA. Are we together? FTA. That's when price will come and tap into here and go altogether. Even though this other day that came in, some other day, this is the old day. Sometimes you get confused. You see price is starting to buy. Give it time altogether. If your setups are here, it can start to buy, maybe lock some, and then comes back selling. When it comes back selling, this is when it will tap into. As I told you, it can activate at any time. You can wake up in the morning when price has overbought. This is the daily V to V. You get price has overbought. Together. Just because it has tapped maybe into this H1 that you didn't consume, and it's fast bought altogether, it happens. The H1 or sometimes the 30 minutes or maybe the 15 minutes. So I also know how to trade these areas. So then price buys, then later, maybe in between midday, it leaves the long week. This is the current day. Remember, it was doing this. It is also creating 4 areas of liquidity. This is what I was saying. Some XCC members do mistakes. Like, they will see this one as a new area. Even they see buffer, they see everything. They get excited. Then price goes through them. Why? Because price likes the old areas of liquidity that are formed in the previous one. Because this indicates that price didn't mitigate them. That's why price has to come back here inside into this close and high. because you have unfinished business. As I told you, price always seeks liquidity. No matter what you do, price always seeks liquidity. Liquidity is like fuel. It's going to ignite them to start going in that same direction. If there is nothing here inside, it will just go through. Let's assume even maybe this one was consumed. As I told you, by me consuming, price has tapped into the liquidity engineering. If it taps the flip level, it's not yet consumed. Are we together? Until price comes into the 50%. Let's assume all these guys have been consumed. That's when it will go to another daily candle that may be closed bullish and had an unfinished business. Are we together? That's when it will go into the other one. Keep that in mind. But before we go into deeper into that, we shall see that later. Let's assume price didn't consume this one. Maybe it was borrowing. And it will come here, start living here, a long week rejection, a long week. This is your daily candle. This thing can happen even during, when you're about to see, when the market has been selling the whole day. Just like the way you saw on gold. Someone can wonder, why did gold instantly start to buy out again? It's the same process. So we can have this type of a structure in H1. We're going to only use 4 hour as a confirmation, as FTA altogether. But we are going to first learn something called authenticated derivatives and how to play with these points of interest. So price will come to this one that is like a shift with inside formation. This is what intraday likes most of the time. This one happens in a continuation, don't forget. It happens in a continuation. You find that, okay, maybe even data has, let's say H1 has been buying, or maybe created this bit of pullback, which is this candle week rejections that you're seeing. So price taps into there. This is how intraday is formed. Now imagine if you take this in the small time frames. So price starts to go higher altogether. Anything outside the close and the low, and this candle is not yet closed and is still active, I won't take any area of liquidity that is above here. I only take areas of liquidity that are between the close and the low. Have you heard that? Between the close and the low. So you can have this type of a structure. Even you can also have this other type of structure, the H1s. So I've been seeing some people trying to mark 30 minutes. Remember, this is day. Don't go into 30 minutes. Your role is look for the H1. If you don't see H1 VTVs, look for the 4 hour. At least it will be seen there together. If it is not there, leave that asset. That's why we shall trade it together in this daily candle. So let's remove this. Sometimes you can have these type of structures in H1 also. Whereby this candle maybe, okay, the H1 came, went high, okay, maybe started to go down. Sorry, let me do this. How should I draw it? Okay, let's assume price had opened here. Then price created for us one area of liquidity. It may not even have FTA together. Maybe created another area of liquidity outside. Of course, price will come and consume this one because it's not mitigated together. But there's a low chance for it to come back here. When it comes back here, it may not even have the FTA. So respect this point. It's not about FTA altogether. So you can have this one, H1 only, and price buys at least. You can't fail to get pips together. There's some scenarios whereby even I've seen price does this. That this is a bullish candle, you marked it, but this whole let's say it closed bearish and remained there inside the bearish and closed bearish altogether. And maybe it went so deep to the week and stopped there. You just mark this as also your continuation because price is going to come again. Look through anything that we didn't mitigate here. Because here you can also have sometimes the H1s that are here. Maybe H1 has been buying, uh, maybe sold, created here for us an area of liquidity with the 4 hour in line. So price will open. Another candle will come in maybe the next day, try maybe to sell from here, and maybe fails also to goes deeper later in the evening or maybe in midday, decides to sell here. It happens. So your role is to monitor how did these candles close. You can end up having this. The whole day you marked here looking for buys. But again, when it was doing this, it had closed here. And maybe some few buys came in. So when these buys are coming in, it will help you maybe try to retrace because of the previous candle. And maybe you had, maybe let's assume this previous candle had maybe some derivative somewhere here down. So some H1 V2V that we didn't mitigate. So price will produce for you such a type of a buy by this selling. Remember selling candle. And this can even activate maybe in the evening, price maybe in the night opens with a gap, then decides to sell here. Because this one has formed for a selling candle here. So price will start to short. We are going to see some chart examples. Let's go into some chart examples. Let's begin with Euro card. That's what I was asking yesterday, some students here. So if it's a daily candle, look for at least, you know. Now someone asked, why is price over consolidating here altogether? But let's first go back into the daily candle. First, price will always come at least give you those momentum. Price will at least give you that momentum. Okay, before this buy, let's first look at the previous candle. Now we can see that this previous candle closed bearish. This is what I was telling you last time. Remember what I told you. Remember, you see this candle, see? Price, this is the close, this is the open. Price can decide to take days. You see that? This is another bullish candle that came, but price failed to completely close above the wick. Yes, it closed above the wick, but the momentum is low. That's why you see sellers coming in. As they are retracing, it's trying to look for an area of liquidity to take in. This is a daily candle. So if I go to the H1, you're going to see something. We can see that in the H1, at least we have this area of liquidity that is visible here. That's why price is building up momentum. We shall learn how to trade weekly, yeah? We are just learning how to trade intraday. The daily candle, how to trade the daily candle. We shall learn how to trade the weekly candle. We shall see how to trade the 4-hour candle. We shall see how to trade the monthly candle. How to get. They all have different concepts. I think that. So we have this H1 V2V, as you can see it here. Remember, we said something that has been consumed has to make sure that the price taps into at least the equity engineering. The rest is history. That's why I bought yesterday with confidence. Now, the reason why I sold here, if you go back to the daily, the reason why I had to sell, let me do this for you. Let's first remove this. As I told you, I know price is going to buy in this range, but I have this other area. This is a bearish candle. See how I'm marking them? And it can act like also swing point or reversal. Why? Because price has also closed below that gap. But you don't rush. You don't rush. I'll only take the continuation for sellers to the downside if there's another bearish candle that comes in that is stronger. But before that, I can capitalize on this sale. So let's first go to the H1 first. So go to the H1, what do you see? This was yesterday. Okay, let's first cut off the time frame. Not confuse you with this one. Let's first go back to the daily. Let's first cut off this daily candle. This is why we took shots. Let's go to the H1 first. Now we can see that the H1 at least had an area of liquidity here that is at least inside. Check this from this point. Now I want you to observe this thing. This area of liquidity is going to confuse you. When you see here above, we shall have one which is here on the high, right? But we shall not focus on this one. We first focus on this one that is at least near the close. But this one is going to confuse. It's like inside and also it's getting outside. Observe this. This is the type of area. We shall first learn them, don't worry. These are type of areas that we shall need to learn. So you have this one. So majority of guys, yes, price will come and mitigate this one first altogether. But if you take close look, this is the right lower high. This is the right one goes right to the break, but because as you said, when it comes to consumption, you have to make sure price wicks in into the liquidity engineering that is here. That's when price will come and weaken. At least you can't fail to get pips altogether. But remember, the reason why this one's like this is because we are on a support of a higher time frame. Don't forget. But at least I can capitalize on the sales. That's why you're seeing prices like, the B2B is like getting in, getting out, getting in, getting out, altogether. Let me do this for you. We're going to do tons and tons of examples. So you have this high, we have this low altogether. So when you go to 4 hour, you can see at least you have some extra confirmation for you. Now, other brokers will hide it. This is why I don't like Owanda. But if you go to FXCM, let's see if they can allow me. Because some brokers will hide for you those candles. Even this guy is doing the same, but at least he tried. He tried because this is a bullish candle, which indicates some bit of an FTA here altogether. So let's go back. If you check FXCM, that's why I always look at least 3 brokers, two on your PC, two on your phone altogether. At least you can't fail to get. Let's go back to our wonder. I used to have that confirmation for FTA. So if you go back to that H1, that's why it was easy for me to hold my sales, but not for long because I know I'm on a support for a higher time frame daily kind of for bulls altogether. So if you come here, so you just go to 15 minutes. Simple. Okay, it's not that hard. So in the 15 minutes, you can see we have this area, price over top in. You can say to go and refine, it's up to you. You go to 3 minutes. And the thing is, you can see price has had over also tapped in this place altogether. That's why price kept on wicking deeper. Price tapped in the first time. It can tap in several times. But trust me, price has fast produced for a momentum. Now, the reason why it goes deeper because we shall have the an H and M1 that we didn't consume. That's why it goes deeper. But now when you learn 4 hour trading, the 4 hour candle V2V, I'll trade the 4 hour candles. Oh, sorry, it is here. It is here. If you observe, you have this one here. That's why nothing tapped in here. But when you go back to the, but when I was trading here, I traded the 4 hour V2V, sorry, 4 hour candle. That's why I caught in those sales first before waiting for you an H1 V2V altogether. So if you go back to the H1, that's why you can see price came, you get tapped in here. Price tapped in here so fast. So you can't set it because the stop limit of 1 and sold so fast. So if you had got to also your early entries from here in the 15 minutes, you could still capitalize on that altogether. You could still capitalize on that. But before even this sales coming in, I had traded the 4 hour. Let me just give a small sample of how I trade the 4 hours. It's really interesting. Um, I just use them for continuation, those 4 hours. How did I get such a sale here before? Because I gave it out in the VIP. How did I get such a sale here? Let me just give a snap look of of how I trade the 4 hour. Let's first remove this. Before all those sellers coming in. Okay, I noticed that the 4 hour candles were dropping together. Now it is directly to the reversal point. Price has taken out this gap altogether. So the candles are selling. So I noticed, okay, we have here a selling candle. The candle closed bearish. I don't want you to go and practice this. You need first learn things slow by slow, but just have an idea altogether. Just have an idea. So you mark this high, you mark this low. So H1 closed bearish. So 4 hour closed bearish. I have to check it. H1 closed bearish too. Yes. How many candles do you have in an H1? In an H4, we have four 1 hour candles. One, two, three, four. Which candle closed bearish? This one. Now, by this candle closing bearish, we shall look for the 30 minutes. 30 minutes V2V, you can see it here because it is in line with 4 hour. But since H1 had closed bearish, also, we are going to look for 15 minutes too. You see, we have the 15 minutes V2V. This is how we continue with the trend. There's nothing magical here. So this is my area of liquidity to take in the shots. That's why price came in to tap into that area and started to sell. That's how it is selling. That's how I caught in those sales in the VIP. And price broke the low. But now it's breaking the low, it's creating another 4 hour. That's how 4 hour candles are formed. Are we together? That is how 4 hour candles. Look at, I don't mind that this one because this one failed to close below the wicks. That's why I not regard this one. Because this one tried to break below this wick. It's like more or less of a breakover structure. Hope you're understanding something. This one, I can't mark it as a bearish one. Why? Because it has failed to take out its low. It has failed to close below this wick. That's why I don't consider this as an area of liquidity. Or I don't consider this as a 4 hour candle to trade. Anything that comes will have to tap in at first for us a 4 hour candle. I say that I can't even use this one. Why? Because the candle failed to close below this wick. If I close below this wick, I'll use this one as a continuation candle. Are you understanding something now? It's not that hard. Are we together? That's how I trade this for our candles. It's magical, right? Mhm. So if you go to here at H1, let me take you through a snap look. We can see that even this H1 closed bearish and it's inside between the low and the high altogether. And if you observe this candle, at least it's inside between the close and the high. That's how we traded them. So being H1, we can use 15 minutes. If we didn't have a 15 minutes V to V, we could look for at least a 30 minutes. Now, this 30 minutes will act like a confirmation, like a buffer for it. Or it will act like an FTA type. So if you go to 15 minutes here, you can see you have this area of liquidity. But if you observe, it's more or less like also a shift with inside formation. That's what I was telling you. We like to see those areas that have some bit of shift with it inside formation. How? You can see this is price creating here. The low comes. Sorry. How can I draw this for you? This is like an inside formation because this is like the low and the high. I may do it vice versa. Because price shifted to the above but had an inside formation. That's why price likes these areas of liquidity. And that's why using 15 minutes because then H1 closed also bearish between the close and the high. Right together. Then we use 30 minutes as a confirmation for V2V or else as R. So that's how that 4 hour candles are closed. That's why see price is ranging, but I can take in sales. So if I look for here uh for for liquidity engineering, if you want, you can go and refine in the 3 minutes. So if you have your big capital and you're trading it, so this is 15 minutes. So you can just go and look for liquidity engineering here. Then you take the trade. Let me do this. Let me first put it back. Let's assume someone had this for 15 minutes. So we can see we have this one that is visible here. We have this one. You can use that one whereby price also tapped in. But this one price didn't tap in. Is it? Yes, price tapped in by an inch, a small inch. If you had used the further one here, where is it? You can see this wick is so high, but price had already tapped in as it was selling. Are we together? As together. So we just had this one. So we had this one that was clean. So price has to come and tap in. But if you had marked this whole zone, this is a very small area of liquidity. Remember, this is a small area of liquidity. These are like 14.4 pips. Right together. These are small for you. Sometimes marking the whole area of liquidity saves you a lot altogether. But then here, if you have this one, you can even decide to use the cycles the inside. You can wait for 3 minutes shift to the inside formation. You go back to the roots. But that's how we trade those continuation. We need to see at least the body closing above the previous candle's wick. Then you can take the trade. Now, this type of a shift in inside formation, it's not that you know, but we have three scenarios, what we call authenticated areas of liquidity. So which we shall learn here on how to take them. So price sold altogether. Remember, as it is selling, it is creating for you an area of liquidity, which was the other 4-hour FTA that you saw. Because that means produces for you that. Then in H1 to also produce for, I think, a V to V that you will use for the next intraday altogether, which you see here. That's what I'm saying. For us, we create for them V to Vs, then XEC guys will come in later altogether. Hope you're understanding now the logic. Or maybe smart money traders, the smart money traders. You see, when I can use confirmation for buffers, 2-hour, 3-hour, demand and supply is on traders. We produce for them zones altogether. So that's how it works out altogether. Even these H1s, this M3, this H3s, they form the same scenarios altogether. But now, when you go back to the weekly, this is why I take this buy. Let me show you something. Another reason why I'm taking the buys in the evening. When we go back to learning how to trade weekly candles, just a small concept. There's some things you need to learn. Remember, we have two scenarios whereby the wick doesn't go deep, but the wick stops somewhere here in the middle and produces this weekly candle. Then you have another whereby price comes inside deep the wick together and produce for you a weekly candle or maybe any time frame candle. So you have this as a weekly V to V or weekly candle. So I need to go to the daily. Remember, I want to produce another weekly candle. So we know that in a weekly candle, how many daily candles do you have? 1, 2, 3, 4, 5. We have 5 daily candles in one weekly candle. So this candle closed bullish and it's near the close altogether. So we have this area. I'll mark this one. So now, if this candle also closed bullish altogether, so that means I need to look for areas which aren't consumed. So if I go to the H4 first, we first take the H4, though direct connects with H1 more, but you need first check it together. Just check the 4-hour for the sake of checking together. Now in the 4-hour, we have some bit of an FT A type, okay? But now we have to go and look for the H1 V2Vs. So that thing, don't fall for any H4. Look at this one. Look at this one. Price takes you out. Because we have the daily candle here inside that should be producing for you the right one. So if you go to the H1, you can see have now this H1 V2V that has a 4-hour FTA type altogether. But if you stretch below, sorry, if you stretch aside, it's more or less like also a shift with an inside formation. So we have several. We have this one, we have this one, we have this one. We shall go with this one. Why? Because this is scenario 3. For dedicated areas of liquidity, price taps onto the ceiling, then breaks out. So price will have to come back to this one. So then later I can go to 15 minutes. We can look for area of liquidity and take a trade here. If you want to go further refining, this is also like a swing point. We shall learn them very well. Bullish engulfing. You can go deeper. You find maybe another. This is 15-minute swing point. If you go to 3 minutes, you find at least a break of a structure to continue higher. The price broke above, so we have this break of structure here. So mark this as your liquidity engineering too. But if you also observe, we have another swing point here for reversals altogether. We have this one failed to close this decision, so we can mark this as a swing high, swing low. So if you go to the M1, you You can find yourself here deeper. So if you go back to the H1, that's why price produce for you those buying momentum altogether. This one. Now, how do I capture such a buy? It's the same logic altogether. The same logic. So if you go back here to the H1, you'll notice that this is also like a swing point. So if you go to 15 minutes, actually, if you don't want to capture this first buy, you can decide even to capitalize on this one that I quote. But let's first look at this one. So you see, this was a price first tapped in. You have to be so patient. What's a hard time frame? H1. This is intraday to take time together. But remember, another daily candle is coming. So this one's exactly producing for a weekly candle to continue bullish. You see that? You see that? Now, let's mark this one also as a daily candle because now price is reversing, right? Being daily, we can look for H1s. But look at the behavior. Look at the behavior. You can see this candle already tapped in, right? Look at this behavior. We see it has been struggling, still an indecision candle, but it's closed bullish, right? Which indicates you have some buying momentum. So if you go to the H1, H1, you have this V2V that is producing for you the recent buys here. This one. Hope you understand now something. I think that let's go back to the day. So one that's producing for you this daily candle push one, the new daily candle that is coming up. So one producing for you this daily candle. So let's first cut this recent daily candle and I show you. You have to rewatch this video several times. You need to understand the structure of these daily candles. How do they look? So you can see you have a listed daily area. And if you observe, it's more or less also like a shift. It's more or less like a shift with an inside formation. But again, so price came in, tapping, until it tapped into the liquidity engineering here. Price starts to buy. So let's assume you're trying to use buffer. Let's see. What do you see in the 2 hour time frame? For those who like to research, put in time, it's more or less like also a buffered area, as you can see. But you can see it acts like also like a FTA type for you together. So if you go to 4 hour, this is how 4 hour will look like for those who like to research. Let me show you something. I think that now 4 hour doesn't have like an FTA type, which is okay. Yeah, it's not a must that you need to have a 4 hour FTA or something altogether. But now, if you check even this 4 hour, candles are consolidating. Let's assume we're trading 4 hour to 4 hour. Let's remove this. We have this 4 hour candle that closed bullish. Okay, what is my PC doing? Um, okay. So you have this 4 hour. I was saying that. Let's first move it. Now, this 4 hour, you can see, you can go and check in the H1, how the H1 close. H1 candle closed bullish altogether, but so they're out of range. So in this H1, the reason why price is going so deep is because we may not have anything to mitigate deep in this candle altogether. We may not have anything to mitigate. So if you go to 15 minutes, because it's H1, see, H1 doesn't have anything like 15 minutes V to V. Okay, it only had this one that you see. So that produced for you these buys together, but the buys failed to continue higher for some reason because this could have been also an H1 candle. So it's a little bit interesting. Then we shall only go to the downer ones because it's H1. Sorry, don't forget this is H4, H4 high, H4 low. Let's first go back to the 4 hour. I need to see what was I marking here. Okay, let's remove this one. We want to originate where these buys are coming from. So this H1 had also closed bullish. This one, so one that produced for you some momentum, but it failed to close above the previous H1. It produced for you continuations for H1. It's interesting. So you can just go to 30 minutes to see 30 minutes. It has a very big area of liquidity within this 4 hour. Hope you're picking something, but you should also know how properly trade the 4 hours. Then producing for you. See how those time frames are aligning. So if you have here the 5 minutes, 5 minutes liquidity engineering here, price tapping in and buying. Now for me to continue with these continuations in the 4 hour, I can say to wait for another 4 hour to close. But remember, it is still within the 4 hour range. See, this is still showing that it is over consolidating. Let's do this. Now you can see it is overranging, right? Even you can decide also to sell in these ones. You can, though it is ranging within this previous bullish on time. Nothing has closed above the wicks and the high. That's how consolidations work out. So this bearish one to come in, the same scenario. Let's do this. So if you go to the H1, before this, if you want to see how this candle came in, when you come to the H1, we can see that the H1 candle between here, it closed also bearish. Before I closed bearish, 1 hour candle closed bearish. So now within this H1, we have this H1. So you can look for 15 minutes V2V or 30 minutes V2V. Now we can see we have another V2V here inside. Though candles may hide from it from you, but this is a bullish candle because the forces of the wicks indicate strong bulls. So if you check other brokers, you understand why these sellers came in together. So the 4 hour candle produced for those sellers. So that's how price keeps on maneuvering. So if you go to M5, you see clearly it's a zone. You see, it's clearly a V2V. So price retraces in, sells. So it's interesting on how we trade these candles. Like we are inside the intestines. You can take a trade at any time. The only thing that I'm worried of, it will make you have a bad vice for over trading. Now let's try to take a trade in these sales here, in this 4 hour here. It's not good to trade every candle, but for you to basically take the buys here with ease, you need to wait for at least a bullish candle coming in for 4 hours. Then you shall show how to trade. Now you can see price overwicked out. Why? It could be something small. We may not have anything inside to take a trade on. Now this H1 also closed bearish. So 30 minutes. We don't see anything. Are we seeing together? We only see one that is formed outside. So we don't see anything inside as a V2V to take in a trade. We only had this one, which price had tapped in only the flip here. Price tapped in, sold a bit. Since it is ranging, so price goes deeper. So this will also be an area of liquidity, this one too. We could not have maybe liquidity engineering resting here, the 3 minutes. Oh, we have it. We have liquidity engineering here. So you can see price, yeah, decided to go through it. But if you use cycles, you can take a trade for sales. But for betterment, don't trade every candle altogether. Trade only your setups when they are seen. You shall soon have properly traded the 4 hours. Now, if it was my case, if I trade this 4 hour candle, I'll wait for at least a 4 hour candle that is healthy and strong enough, at least to close above the openings of these guys. Altogether, if you're not close above the wicks, if you're not closes at least here, then I know, okay, now price is going to produce momentum. That's when another candle will come in and maybe I'll take in another buy for continuations. Even shall show how we shall take here sales, like this one. You can do some investigations. Why is price selling here? Why is price buying in this 4 hour? And this 4 hour candle comes, closes, another 4 hour candle comes in. Why? There's something special here to make price buy. We have this other 4 hour range candle. So price retraces, takes in some buys, price goes. Now, for us, we're creating for them V2Vs. But always remember higher time frame speaks louder. That's why price want to respect here, to respect this one. Why? It's inside the daily range that we spoke about together, and it's even within the weekly candle. But we're just learning how to trade the daily candles. Don't rush to go and start trading. I've been seeing some of you doing it on your live, which is dangerous. I don't expect you to do that. Are we together? Even the reversal candles for intraday, you can see we have this one. You see the candle closed bearish, bearish, bearish. This is a swing point. Price broke structure to the downside. But now price wants to go high. Are we together? Price wants to go high. This is a reversal candle. We shall learn how to mark intraday reversal candles. Are we together? How do they look like? Intraday reversal. We are just marking on a continuation. This is a reverse one. So being daily, we can go into the H1. Just look for an area of liquidity. We can see that price had reversed from here because it's a reversal candle. Price shifted this, and inside formation, you have this one, we have this one, we have this one. These are three. We shall learn them about. So we shall instead take this one. But let's first learn about the authenticated areas of liquidity. So you can have an extra confirmation for 4-hour FTA. Okay. So let's see. So price weeks in. Oh, first wait. I think I rushed here. Why the price weakened so deep? I think I just rushed to mark because I noticed something. This area of liquidity is so big. Okay, let's first cut it here to have enough visibility. So let's first learn about the authenticated areas of liquidity. Let it first refresh, then we can resume. Please don't rush to start trading. Don't rush. I've been seeing some of you trading your live accounts. Uh, the stop losses are hitting. You don't know why you're trading it. Need first learn. First learn. Just first back test one thing. This should be the area of liquidity, this one. Why? Because this is the first area that tapped in here. We're going to learn it today, how to trade these areas of liquidity. This one. Yes, this one may have liquidity, could have a Quasimodo, even this one could have a Quasimodo. But price has to come to this one that first tested before this one testing. What do I mean? Price created here lower low, lower high, lower low. So you have this higher high, higher low. So price came and first tested before this move coming in. So it tested this high. This one we call scenario theory. We're going to see it. Price tests in, then this one comes to test. So we don't consider this one. We shall consider this one as a one. So that's why the price comes, taps into this region, and starts to go high. Let's first learn about authenticated areas. We are going to use them in intraday, continuations, and reversals. So let's do this. You have to put them in your mind. So we shall have here the Quasimodo here. If you had wanted, you can even mark this flip level that is being seen here. Price taps in for the first time, second time. But let's first go through into uh, the daily areas of liquidity for us to first. I don't want to over teach a lot. Because we're still learning intraday. You've not yet begun anything. Authenticated. You're still in the candle structure. Don't forget that. Authenticated. The rest are easy. Trust me, the rest are going to be easy. They're just one stuff. Authenticated areas of liquidity. Are we together? Or you may call them the complicated ones. Where traders tend to put in a lot of mindset. There are only four that we are going to focus on. But trust me, you've been seeing this for quite some time. You're going to see them. You've been seeing this type of shifts within inside formation. You start scratching your mind. You wonder, how am I going to happen? And you're going to use them out in the intraday. These ones, intraday, even in swing, trading those weekly candles, trading those monthly candles that are going to come into existence altogether as you're piecing up everything. But your role is to understand the candle size, candle body, understand the message the candle is giving you. For you to know what price is going to do, first see what is the candle speaking. If the candle is speaking this, follow that altogether. So let's begin with the scenario one. We may have price coming, creating these areas of liquidity. Price comes, creates for you two areas of liquidity. Observe something, my guys. Observe something whereby price comes and maybe taps into this flip level and breaks out. Let me first separate here. I don't want to confuse you. Price can create this type of a shift with these inside formations. We can call them complicated areas of liquidity. All these are under candle structure. Because these ones, you're going to use them a lot in the situational time frames of your choice, depending on the time frame that you're using. You get, I have no control over the time frames that you're using. So you may have this one. This is the validation and the invalidation. Remember how you mark the invalidation? We mark the closures are together. So you have this one and you have this one. Now, if you observe this scenario one, if price comes and taps into this flip level of this guy, the validation point, when price is coming back, it's going to come back and tap into the liquidity engine, which means price has to come and consume 100% of this leg, and this is where price will sell from. I'm observing this is scenario one. What if we find that price has already mitigated inside almost 50% or 100% altogether? You ignore. We have nothing here. That's when price will just come and fly away altogether. That's what will happen. This is the scenario one that I'm speaking about. Scenario one. You shall use them out in the intraday. Make sure you master them to the maximum. You will see them every time, every day. So you can see price A. If price stops here, price will come here. At least to the liquidity engineering here. Price would have stopped you on the flip before breaking. But observe here, there is a space. Are we together? This is a higher high and a higher low. Higher high, higher low. So before price breaking, it taps into here, then it breaks out. Then price will come and liquidity and to later sell altogether. Let's go into the second scenario. So now the second scenario, we're going to have this type. High, high, low, high, 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 low, high, high, low. So you shall have this one. Whereby price creates this one that is virgin, then creates another one, then price happens to tap into this one and price breaks. See something. This one is virgin. Right together. This one price tapped on the validation. Okay, guys, mute. Okay, mute. Bless, I think you can mute. Okay, let me mute. Okay, so so we shall have this one. Then this is scenario two. You're going to use it a lot in the intraday. Altogether in the expansions, in the reversals, altogether. Oh, in what you expansion the same as continuations, and price continuing. So you have this one. Price didn't mitigate this one. Observe. When price came to this one, it had mitigated it only on the validation, on the invalidation. But now, instead, price will come to this one because price tried to consume this one. As I said, by consuming, we need to see price tapping into the liquidity engineering. If price taps into the validation, in the validation point, it's not yet consumed altogether. So price will come here in the liquidity engineering and sell. Then this one, we shall use it later in future. We shall see how altogether. But price will come to this one. It won't come to this one no matter what. This is scenario two. Altogether. Scenario two. These are the types of inside formations that confuse majority of people, and they are so common altogether. This one's like tapping into the invalidation before breaking. When it breaks, price will come here and respect this one and it will go. Right together. So let's go into scenario three. Now, scenario three is very interesting, and I think some of you have been seeing it a lot of times. I want you to observe scenario three. Higher high, higher low, higher high, higher low, higher high, higher low, higher high. So price comes, creates this area of liquidity. Then before it breaking this low, it tests here, then does this. You see, it is testing the higher low. This is the higher high. We have this area of liquidity that is virgin. We have this area of liquidity that is virgin. So price is going to respect this one. It's like an example that I gave you, but we shall do examples of these guys very well. Price will come into this one and respect this one. Just make sure this one doesn't have a wick, like other example. If this one has a wick here, like price first tapped in here before creating this one, of course, price will go back to this one. We shall see it very in examples, but this one, whereby this one is breaking, this one broke, but it has here maybe some candle wicks as it was buying. Maybe these are selling candles, you know, creating all those selling candles. But we shall first respect this one because here it will have also here liquidity engineering and together. Just make sure we are between the previous invalidation and validation. This is the higher high, higher low. Even though you have an outside formation, price will come back to this one. This is scenario theory. Mark them, understand, because price comes, taps into here where there's liquidity engineering and it buys. As it is buy, it fails to go higher, then goes down. It will come back here. And it will go, it will not come back. Here it shall use it in future or even ignore it. Let's go into the other scenario that is also more interesting, that also people see a lot. The last scenario. This is going to also be interesting. Majority of you used to see it and you wonder, why is price doing that? So let's assume this is your H1 rating, and maybe it has come into a daily area of liquidity. It has come into your daily area of liquidity. Or maybe this is your forecast has come into the weekly area of liquidity. This is your H1. Now, H1 performs a shift with inside formation altogether. But keep in mind, I'm not adding here an FTA time frame. FTA for 1 hour is 4 hours altogether. So that means if you check in the 4 hours, it's going to be like this. Now, remember H1 has shifted the inside formation. Now, 4 hours is also coming. Now, when happen, find that, okay, 4 hours performed an FTA, the candle has completely closed below its candles wick here. Let's assume it has broken structure. H1 has performed here an inside formation. This one is so common. Then what do you do in this scenario 3? We shall only take the trade here in the invalidation. Sorry, on the validation of this 4 hour. Because here we shall have the previous Quasimodo in the 4 hour, like in the 30 minutes that we didn't respect. So we are price we respect here and it will go and it won't come back to this H1. It will come back to H1 later in future, even sometimes to give a few pips and to later go through. Now, this is why I love this scenario a lot. This one. I see an H1 is inside formation. Before I performed an FTA, I'll go with this one. We shall find out in future why. So it will be easy. This is your 4 hour. This is your H1. Together. This is higher, high, higher, low, H1. So remember H1 will also come and also tap in here and will go in line with 4 hour. So if this is your 4 hour, if this is your 4 hour, this one will be your daily doing this. Then question an FTA. So price will instead come here. Now there's also
It's true. That one is very common.
So let me also give you an extra bonus. Now you're also going to find out that the FTA time frame can decide also to do this. Price can decide to do this. Remember H1 shifted inside formation and it does this. respects here. This is your FTA time frame. Does this. Also, what do? You go with this one. You forget about this big guy because this guy speaks louder than the H1. This is your FTA time frame. Use the one for FTA. That's why if you're trying to trade FTA, let's assume you happen to see an inside formation, take your time. First, go and observe the FTA time frame. If the FTA time frame has created an area of liquidity, go with the area of liquidity being created. Don't even think of this guy. You've mastered that. If your FTA time frame, let's assume you happen to check the H1 created an inside formation. It can apply in all time frames. This can be maybe, okay, let's make this one 4 hour. But for our shift to the inside formation, find out that the daily FT has created also an area of liquidity. It can look like this. Sometimes it can look like this. Altogether, it can just look like this one, a price shift, but quest for an area of liquidity. Go with the area of liquidity. Don't even think of this one. Just look here for liquidity engineering, go down. What we mean by liquidity consumption, this is whereby price enters into the liquidity engineering. We shall learn liquidity consumption very well, deeper, very well. It's really interesting. Then price will sell. You're going to find these ones a lot when you're trying to trade the monthly candle, when you're trading the weekly candle, when you're even trading the daily candle, even when you're trading the 4-hour candle, even trading the 1-hour candle. Are we together? So we are going to use these concepts with ease. So if I'm looking at the 4-hour here, are we together? 4-hour shift to the inside formation, they created this. I need to observe, is it the end of the month? Yes, the month has ended. Then I'll use this one to produce that monthly candle, and I hold the whole month. If this is H1 shift to the inside formation, right, together, but this is already a 4-hour FTA, but has got an area of liquidity. Most likely, we're creating now a weekly area or weekly candle. As I told you, weekly candle can even decide to form on Wednesday. A 2-weekly candle can form side form on a Wednesday, Thursday, Friday. I think that's why ICT guys used to get that thing of, oh, the new weekly candle law is formed on Wednesday. The new weekly candle law is formed on Tuesday. Weekly candle law is formed on Friday. And find that the price that whole Friday, the buys creates completely a fully enclosed candle for that week. It is possible. We shall add in some bit of timing concept, but it's not that a big deal. Yeah? Your role is to wait for what you call candle closure, interpret the structures in the situational time frame, execute. Simple. You have at least 90% win rate plus. Even though I see price is selling, but the candle says buys, I will take in that buy and wonder where that buy come from. But anyway, let's first go through. So those are the scenarios that you are speaking about. Now, I want to take your time to master them. First, take your time to master this structure because they are going to be so common doing intraday. Today, I've just learned on how to trade continuation candles. Don't forget that. How to trade continuation candles for intraday, which means the daily. Then later, we are going to learn about, after mastering these guys, then we are going to do examples of these guys. Then later, we shall also learn on how to trade how to mark the intraday candles for reversals. Reversal candles for intraday. These two are going to work in all the time frames that we are going to learn. Are we together? How to trade the reversal candles for intraday. What do we look for? Simple logic. Are we together? Then after that, we're going to learn about what we call affirmative liquidation. We shall use it a lot in the liquidation concepts a lot, most of the time. Let me give you an example of affirmative. It's really interesting. Let's go back to the 1 month. Let's go to gold, okay? I know I love gold. I just love gold, I don't know.
Because it pays.
It pays, it moves faster, it doesn't delay like other cross pairs, you know. So I can have, we shall do affirmative calculation after understand liquidity consumption well. Let me give an example. So I can have an area of liquidity altogether, and maybe price comes back here. This is maybe monthly together. Then daily happens to perform a shift with an inside formation. Well and good altogether. Unfortunately, price decides to sell. Remember, it's retracing back to this inside formation. So majority of traders will be trapped here. So as so many traders are trapped in here, they're trying to look for buys. Unfortunately, price does this. Starts to go altogether. It can happen here. It can even happen here. It cannot even be month. It can be any time frame. Daily area of liquidity. So you find that this, okay, this is the monthly. Then find that, okay, now let's assume this is the daily. Shift within the inside formation. Price goes deeper, activates and starts to sell. Just giving a small glimpse. Starts to sell harder. Then you wonder what's going on altogether. You start scratching your mind. It's just simple logic. If this is the coordinated time frame for the monthly, which is daily, we shall go to the uncoordinated time frame, which is below the day, which is 4 hour. That's where we shall find the 4 hour shift in inside formation. This one we shall use it a lot in the liquidity consumption. We have an area of liquidity. It can even happen here, whereby how price comes here. Unfortunately, it decides to go down together, because if this is my daily, we shall find this in 4 hour. If this is my weekly, we shall find this in the day. It's really interesting. Eh? If this is monthly, we shall
That's
find this in
common
the
also.
weekly. If this is 4 hour, we shall find this in H1. If this is H1, we shall find this in 30 minutes. Let me just show a small example. Or I can even give you maybe like two. I don't know. That will be under liquidity consumption. Eh? We have those types in liquidity consumption. So I know, okay, this is the monthly area of liquidity together. We shall soon how to trade also the monthly candles. You'll be able to capitalize in whatever trade that you need. So you have this area. So I know, let's first cut through. Who's sending messages? Why is it delaying? Okay, let's refresh the page. Why is it doing that? Okay, now let's first cut through. So I know that's the monthly area of liquidity. So we can see that the daily shifted. Daily shifted with an inside formation. Majority of traders will be happy for that area altogether. So being knowing that, okay, this is a daily shift inside, I'm not going to rush. I need first to go and check in the uncoordinated time frame altogether. Do you have anything? Because I can see price closed below with this event closed below the swing point, the candle closed below with an engulfing candle, closed below the gap which in case we shall have something here inside. So guys will be trapped here for us to say, let's first check here. If there's nothing here, we shall follow this guy. But if there's something here, we shall not. So you just go to the 4 hour. And go on 4 hour. Now this broker has very bad candles. Now 4 hour, we need to see at least an inside formation. Now I can see price here shifted, but we need to see an inside formation. Let's first check FXCM. Uh, Brokers print very funny things. Now we can see how here already shifted an inside formation. See, price shifted an inside formation. You see, it's like 2 time frame shifting. That's what I mean by affirmation. So just look for repeating here in 30 minutes. So just go back to 1 day. See that? So price comes and taps into that region. So let's first move these guys here. Sorry. Will it allow? So here. So if you go on the 30 minutes liquidity engineering, you'll get that trade. That's why price sold from there. Because of that affirmative altogether. So price sold. So sometimes we see those inside formations don't rush together. We shall sit under liquidity consumption very well. So many sellers would expect price to sell here. Price decides to sell here inside this validation or violation for 4 hours. So if you check in the 30 minutes, you find your entry. The 30 minutes liquidity engineering, price taps in, starts to sell together. Now, even yesterday's sale, as I told you, we know the daily candle closed bearish, right? And some other day was it on a Monday? Yeah. Let's first cut through. Where did these sellers come from and where are the buyers coming from? This is a daily candle, continuation key level. So if you go to the 4 hour for confirmation, you can see you have that bit of FTA type or what you call the liquidity area of liquidity V to V. So since we know we are using daily, we need to use H1. This is the H1 area of liquidity. This one. That's why yesterday price came and sold in here. But here you had to use cycles because price didn't reach the liquidity engineering here. Let's first do this. So price used here cycles. And was it the next day? Which was yesterday, sorry. Price sold. So if I first pause this before these buys, I'm not sure where this buy is also coming from. It's the same concept. So here even you had extra confirmations here. So I know we are in a higher time frame areas of liquidity. 4 hour supports, H1 supports sellers in the previous daily candle, low and high are together. So you can see even you had all those opportunities. Price spread for another area of liquidity within the area of liquidity here. So if you're using cycles, this means if you go to the H1, you can see that the H1 had performed for you here, at least a pass model for you to enter. If you didn't do that, you could have used the 15 minutes FTA, 30 minutes shift with those things, blah, blah, blah. I think that then you can be able to have your trade here. So you can see you have your other type. I want you guys to go and master these guys. You see, we have here 2 types of areas of liquidity. Oh my God, guys, I'd forgotten to give you the last one. I'd forgotten to give you the other scenario. Sorry. Forgotten to give you the other scenario. We have this scenario too. Sorry, my guys. Hey, I was going to close the meeting. We have this scenario whereby price quits. It can quit for you 2 It can create for you three altogether. When none of them are mitigated, it can be three, even it can be two. Let's make them two. I'd almost forgotten. Sorry, guys. Hey, we have this one because you also see it a lot. We have this one. By price shifts altogether with two inside formation, and all of them are not mitigated. All of them. Come on, come on, come on. The screen has gone off. Okay. Sorry, I had forgotten. We have this one not mitigated. Even this one not mitigated. Price will go to this one. Yes, price can also come to this one and give it some momentum altogether, but there's a high chances on this one. Always look at this one. If both of them are not mitigated, they can be three. Look at this one together. Make sure they're not consumed. Price will go to this one. You have to be patient. Price can even set respect these ones are not consumed because they have buffers. But we'll go to this last one. I'd forgot this, the last scenario I had to teach you. Sorry, this one. Are we together? So sorry for that. After I just looked at this one, then I remembered that I didn't give it in. So this one, I would have taken such a sale. Together, this I would have taken the sales here inside. So price takes out from that high, goes, tests this one, tests this one. It's not like the other one which you've been looking, whereby price tests this one and goes out. No, the other one is unique. We shall show how to trade it very well. This one why price didn't go through this one, because they don't have your liquidity engineering. This one has it. But that's why price disturbed to go deeper. We shall see it under well in liquidity consumption very well. So that's why price had to sell. Even though you had seen this one as one zone, like price had created for you that area. Even these buys, you will know how to get these buys. These buys that you see. These buys, it's all under candles. For how to trade the 4 hour candles, selling. So now, how did yesterday's buy come up for evening? And I saw one of the students marking, I think it was Michael. So let's do this. Now, this was the bearish one. I produced for you the bears. Now later the candle, this one. Which one? Which one produced the bulls? Remember, we are still cut through. Yesterday price sold, right? But as it was saying, remember, was it on Tuesday it had closed bullish. This is Wednesday, which was yesterday. Now this is the bullish candle. That's why price was selling. As I told you, if it's a bullish candle for daily, look for H1. Are we together? Look for H1 if it is. Now I saw Michael going into 30 minutes, which was okay, but that was a deadly move. That was a deadly move. So now if you observe clearly, we can see that price had shifted from here with an inside formation. Together. Now, your role is to mark out this area of liquidity, and price had respected the flip level here. It was a tricky one, so if you go to 15 minutes, that's why sometimes I prefer marking all the whole zone. But if you look at the candle structure, you can see this is uh, uh, a bearish engulfing candle followed by the bull. So here we shall expect your flip. Sometimes observe those candles, what we call the breaker blocks. If you understand candle structure, it will be easy for you to know that there is a flip here. No need to go further. Because what makes a good flip, don't forget the XEC lessons. What makes a good flip? Whereby price comes, tests a given resistance several times. When price breaks out, this will become a flip level. When you see candles over fighting in one place, this becomes a flip level altogether. When price comes, tests a several support key level. Most times you find their flip levels altogether. So as you can see, price has been struggling for quite some time altogether. So mark that high. Candle is high. This week is so high. So as someone's looking for Quasimodo, for you observe, there's a lot of struggle here on top. So price broke out. Are we together? So if you go back to the H1, because I know it's intraday, no matter what you do. Because this is a small area to risk in, eh? You put the stop loss here below. Lot size 1. Just one move from here up to here, $1,000 is done. You're willing to lose maybe like $200, depending on the risk management. Even though you use 0.5 on a 1K account of 3%, willing to lose $150 to make maybe 1,000. Depending on your risk. Everybody knows out here to trade. So I know that okay, the day they closed bullish. This was Wednesday and price was selling the whole day. Now in the evening, as I told you, price can activate at any time of the day altogether. This was the buy that happened in the evening. This buy. You see this? Look at that buy. See how it tapped in and started to buy in the evening. It was like FOMO news. Imagine the whole day price was just aiming to come back here. So if you go back to the day, this was the daily candle. Are you seeing that now, Michael?
Yes. Yes.
So that's why price bought and it closed with the strong signs of bulls here in the week. Now, if I want to continue with these buys, I'm not going to, okay, I may see this as a bullish candle, this one too, but I can decide to leave this whole day and wait for how this candle will close. Because if it closes bullish, the one who was trying to look for long-term sales to go down in the monthly, it will be invalidated. If it closes bearish, because this is an indecision candle, remember these hammers are indecisions, you don't rush for them unless you understand candle wick properties. So if the candle closes bearish for today, then I know, now we are going to go for shorts. You get, I'll just play with this continuation. You see that my role is to see is the daily candle closed bullish. Yes, tick. Look for H1s. You can use 4 hour for confirmation. Let's check here if you had any 4 hour. Of course, here we didn't have a 4 hour, but let me show you. We didn't have something like a 4 hour key level. You see that? Okay, 4 hour also had, as you can see, this one, okay, this one broke a hard. For excellence, it didn't have it, had only this bulls candle. But if you observe, even 4 hour has that bit of a shift with an inside formation for H1. You're getting out the properties, my guy. Are you seeing that? These are the best setups that you have to use. So price taps in, it goes. Now, if I'm using the 4 hour candle to candle for continuation, I don't want to wait for daily. This is the 4 hour high. It's not that hard to trade. Go to the H1. In the 4 hour candle, we have how many H1s? We have 4. See, intraday is simplified, right? Intraday is simplified. So 1, 2, 3, 4. This candle closed outside the range. So we shall focus on this one. When you're trading 4 hour candles, you shall learn very well. You shall learn very well. So this 4 hour candle there's a 4 hour candle that stands in to come back here inside to take in the price. So you can just go and look for 30 minutes or 15 minutes because this is H1. Now we have this area of liquidity in the 30 minutes, which looks like FTS. So if you go in the 15 minutes, because it is H1, that's how you trade the 4 hour candles. Now, if I stretch through this, you see the candle closed above. This is an area of liquidity. So my role is to look for 3 minutes V to V here. Or I can just mark this as a zone. Then I take the buys from there for the 4 hour, for the new 4 hour candle that will come in. In a day, we have 6 4 hour candles. So if we go back to the 15 minutes, okay, you may want to mark the liquidity engineering, but you can have a chance of missing out because of those so-called flips. Flips are something scientific. So I can just mark this. Then I now take my next buy here. When that 4 hour candle comes, this is how 30 minutes it would look like. Seeing this how it look like. Are you seeing that? Because price likes areas of liquidity that are formerly in the previous candle closures. Price hates new areas of liquidity formed in the new candle areas, in the new candles being formed. Keep that in mind. That's why we are following that principle. What is the previous candle speaking? And what does it have for me in the inbox? So if I want to flip, I can flip from here. Price comes and taps, starts to create buyers, then I'll execute in so many buys and price goes in my way. Because now I'm trying to follow the higher time frame order flow. Why am I marking this week? Because this week shows it has, yes, it closed above, but has less momentum. But here we have unmitigated point of interest, which I can use in future. which I can use in future. This one, I can use it in future. But now, this candle at least even closed above the wicks. We can even use this one. Let's investigate what is producing this candle start having all those reactions. I guess this candle closed above, but here remember I have an unmitigated area. So if you say candle tapping in here, just keep in mind because nothing was mitigated there. But now for this candle also to close the bullish above this one. So if you go to the H1, so I'm doing what we call candle to candle. Now this one has confusing ones. Check 1, 2, 3, 4. It closed from here. Now this candle had closed bullish altogether. But when it was closing bullish, you need to investigate this one. Did we have anything to mitigate here inside? I think the one that produced for these buys that you see here. So if you go to 30 minutes or 15 minutes, let me teach you something. We don't have anything altogether. So if you go to 15 minutes, though I can see there's some bit of 30 minutes FTA, but it's okay. Uh-huh. Now we can see this one. Price came back here inside. That means we have 15 minutes FTA here. As you can see, that means we shall have maybe 5 minutes. So it's a little bit nice. Eh? Just to show how these buyers came in. These buyers. Now you can see we have a V2V here. And you say flipping is hard to produce for those buys. Now, why is price now taking it out? Why? Because if we take out that candle high. So this other 4 candle that is trying to come in is going to come back for something here inside. If you go back to 15 minutes, we have here another area of liquidity. Remember, this is H1 also. Let's first go back. But I don't recommend anyone just trade candles anyhow. Now, this is another H1. This H1 price has already consumed, produced for those buyers. Then our sellers are coming in. These sellers are also from old candles, don't forget. So then later price could come back here. But the best one is here inside. You need to look for opportunities on the previous 4 candle that is inside. So we have this H1. If price had not consumed here, price can come back here to look for something that it didn't consume here. So that means you have to go to the 30 minutes. Since it is H1, 30 minutes or 15. We shall see how properly to trade the 4-hour candles. I'm just giving a snap look. Don't go and start testing them now. No, first do one thing at a time. Don't rush. Don't feel like you've reached there. Take your time. So if you go to 3 minutes, just look for an area of liquidity here. So you have this one by price closed above altogether. So if you have your liquidity engine and not consume, price will come back there at a later stage. At a later stage. So we don't have anything here. So just ignore this point. You don't have like liquidity engineering. Maybe if you go to this 50 seconds, but I don't recommend you to go there. Just stop here altogether. Even the sellers that are coming in H1, what we shall also see how to trade the H1s. Just for them, if you're trading those 4-hour candles, you don't hold trades for long. You can use them, those 4-hour candle to candle. If you know, okay, now price has performed bullish buys, I can use 4-hour bullish buys to continue higher to some point. If you later understand market direction very well, I know, okay, now price has just a daily, so we can use 4 hours to continue. I hope you're seeing something. Why the buys came in. Because of the previous daily candle closed bullish, our role is to look for H1 that has some bit of 4-hour FTA, shifted inside formation, price bought. Are you together? So that's why price did that. So you can take trades at any time of the day. So first practice what you've learned, then it will be easy for you to take trades altogether. You see, even these sellers that came in here, it's due to these candles. Let me show you something. Uh, and see, this is a swing high. So price closing below the gap indicates that, okay, price is now selling. For a continuation, so go and look for the H1. H1, what do you see? 1, 2, 3, 4 altogether. Now this one closed bullish, which indicates that price is likely to retrace here inside to take the sellers altogether. Because this kind of closing bullish, we shall see that scenario. Kind of closed bullish. So don't try to look here for sellers. This kind of closed bullish and in a selling range indicates that price wants to go back here inside. So that means I'll use this area as a selling point. And for me, my role is just look for 15 minutes. With engineering, I can remove this. We shall see properly on how to trade them. Then these other candles will come in. You see that? This candle coming. So why don't I use this one as a continuation? For those who remember, it's because this candle failed close below this week. If it had closed below this, we could have used this one as a continuation, but it failed. So that's why we shall focus on this one. Why? Because this candle closed below this candle's week. Just simple logic. The price saves. Are together. Don't try to look for this one in buy. That's what I'm saying. Look at the behaviors of these candles. Don't rush. Understand the direction. Okay. For my high time frame key points. So I can use them in continuation. Together. So understand the logic behind it. Understand the logic behind. So we understood where these sellers are coming from. These sellers where they came from. You understand where these buyers are coming from. It's not from unknown places. All these buyers come for a reason. All these sellers come for a reason. These buyers come for a reason. These sellers come for a reason. So we shall see that. Let's pass now. Today I've learned about candle reversals. Sorry, candle continuations. How to trade daily candle continuations, and understanding also the authenticated areas of liquidity. First, master them. We shall use them every day in whatever time frame. Then after that, we shall look at the candle reversals, how to use them in intraday. So when you master these guys intraday, swings will be easy. How to get a weekly candle swing. It will be easy how to get a daily candle swing. Yeah, because that's when you realize that not every area of liquidity is worth it. We want to see only area of liquidity that are formed between the low and the close. Don't forget that. And use the coordinated time frames. If this is a daily candle, use H1 for high probability. Use 4-hour and coordinated time frame for just confirmation. If this is weekly, use 4-hour. Use daily as a confirmer. Let me give an example. Look at this. Where did this daily gold buy come from? Let me first show you something small. Let's first go back to the daily. This buy. The thing that you need to ask yourself, where are these buys coming from? This buy, where did the price start producing all these buying candles altogether for the day? When you go back to the weekly, this previous candle weekly closed bullish. So the highest time frame for probability is, let's first check daily. High probability is in the 4-hour. But look at this daily weekly candle. I have 5 daily candles. 1, 2, 3, 4, 5 altogether. This one closed within the range, right? Altogether. So if we look at this one, we can go to the 4-hour because it's weekly. It closed bullish, which is true altogether. But now when you check this 4-hour, this one, we had here a 4-hour area of liquidity from here to here down. Together, from here to here down. But even you have this one, which is like an inside formation, which has all the criteria with the daily. But we shall understand why would price take it out. We shall see it later because we are from a higher time frame key point. Are you together? But don't worry, we shall see that later. But now those bars to come in, you don't feel bad. So we have here this other 4-hour area of liquidity, this one. So that is producing for you these buys. Are we together? For continuations. Now, this is the 4-hour that we didn't mitigate. This one, yes, had all the criteria. It's in the daily candle, but price went through it. That's why they always tell some people, Monday is not good to be traded for. You have to wait for Monday to give you clear direction. What do they mean? They want to see how is the day. That's why ICT guys use daily candles for confirmation. If the daily candle closed bearish, they're going to wait for price to take out a daily high, then they can continue with sellers, which is not sometimes profitable. You get, if it happens, well and good. If it doesn't happen, you have missed out a trade. So this is the reason why it is buying from here, because it's a weekly range. Let me first take you here. Okay, I didn't want to teach you about the weekly, but let me just teach it to you, something small. To understand the science behind this guys. So we see this is a weekly candle. So now I know that, okay, the daily candle has been consumed, this one. Price has neglected it. Price consumed this one. Are we together? Price, this one was consumed or taken out. This one was taken out. So we have only this one within this candle weekly range. I think that that's true. This is the high and the low. Now this one I'm going to go, this since it is daily, this one, the daily candle, I can go and look for 4-hour or H1. I want you to observe something. Now this daily candle, it has this 4-hour, this 4-hour key area. So in this 4-hour, I'm going to look, since it is daily, I have to look for at least an H1 that is inside there, in that daily candle. Now you can see you have this H1 here. This H1 area of liquidity in line with 4-hour. I see that. So that's why price comes to tap in here first to go. But if you observe, this is the right area where it should be mitigating, which price didn't do last time. So that's why if next time if price comes back, as session price today closes bearish, you shall see here some strong buys. You wonder why? Because price didn't mitigate. But don't worry, we shall see all that, how to play with them back and forth. Reason why it is buying for me, this is a flip level, don't forget. This is a bearish engulfing together. Bearish engulfing. Expect here flip level, of course. That's why price bought. Supporting your ideology for buys. Now even data has confirmed for you buys. So price can just continue. And produce for other data continue and doesn't even come back to this so-called area. Or else you can do this. This is my weekly. My role is to look for only 4-hour areas of liquidity to produce for me the next weekly candle. Then later we shall apply that so-called psychological key levels. It's very easy to know the reversal point. So this is the day, this is weekly. So if you go to 4-hour, I want to look for the 4-hour that is not consumed and should have the daily FTA on it. So I can still have this 4-hour area of liquidity that is not consumed. These up ones were consumed by the daily. This one. So does it have the daily shifts, the daily FTA on it? Yeah, at least it's in within the daily FTA point here. Check this. But price went, but price didn't come back fully well. But for me, my role is just look for the daily ones here. Are you together? But for proper weekly direction, that's what I'm saying. Don't rush to take trades here. Just take scalping ones because we are still in a reversal point. If I want to take a proper one, I will take only this one. Why? Because weekly is bullish. Don't forget that. Where's the property? 4-hour shifted inside formation, and it has at least a daily FTA. I think I'm using this, guys, daily FTA. So this is when I can trust my longer term setup for weekly. I get it. Because here the sellers are still strong, though you have these buys that I showed it to you, who can even decide also to break. I hope I'm opening something in your mind. I'm opening something in your mind. Are we together? I'm just opening something in your mind. So, but here I can take in here the buys with ease. I'm just trying to show where these buys came from. Are you together? So that you don't get confused. But here I can take in my buys for longer term, even though sellers come in harder. I hope we are together. This is the scenario that you know. This scenario, the common scenario that you know. This is the common scenario that you know, you guys. This is the common one. It has already the daily FTA. So this one has a high probability. So first practice on that. We shall learn on how to properly trade the weekly candle. But today I just learned about day. Day is easy, as you've seen. Day is easy. Your role is to mark the previous daily candle. Don't hold for long because you not yet master direction well. Are we together? Get at least 50 pips, 100 pips. You're done. Are we together? When you finish the course very well, that's when you can understand now this daily candle, you need to hold it for a short time. This one I can hold it for a long time. Now, if price had come back here in the weekly and tapped in and started to buy, trust me, I can use these daily candles to continue high. Just like the way we used these ones. Sorry, the daily ones that are here. Then after learning the daily, we shall go on how to trade the weekly. Weekly shall add in the timing concept. Then we shall go into the monthly. We also add in the timing concept. Then later we shall go into the scalping world for the 4 hour and 1 hour. How do we trade them? You see? Then after that we are done with them. Then later we can go into the liquidation concepts with ease. Then we are done. It will be easy to take out these. I'll take this rebalance, balance, rebalance, balance, all that. So first go and master that. Draw those images on the books for those scenarios. Draw them. If you want, you can add on this one as your scenario too. This common that you know about prices and area of liquidity that is inside only together. But now we are learning about the complicated ones. Price quest this one, quest this one. Price respect this one, because both of them are not making price respect this one. Don't forget that. I'm just doing a recap for you. We have this one, because for me, I mastered them. Whereby price comes, quest this one. It taps in here on the support, then sells. You shall use this one. Which price has tapped on here? Liquidity engineering, go. If it has a buffer, confirmations for you. FTA confirmations for you. It's up to you. All together. Even though if you take here trade, if this is 4 hour, we can wait for 4 hour candle closures, then you trade the 4 hour candles for continuations. And you get your pips all together. So we have this other one that you have also learned about. We have this one, whereby price has a fresh one. Then you have this one, but as it was getting fresh, it had already created another one which was tapping in. This one is so fresh. This one, price are tapped on a validation. Price will respect this one. Because price try to consume inside this one. This one shall be used in later future, but not now. Then price will continue down. Then you have this other last one that I gave you as a, sorry, this one, high, low. So I have these areas of liquidity, whereby price performs for an area of liquidity, and even FTA comes in, breaks with a candle closure. Majority of guys will be focusing here. Instead, the price will come here on the 30 minutes of this H4, price goes. Because if it decides to come back, it will come back, respect this new one which was formed. Or else, if it had formed for you an area of liquidity too, this is for creating for an area of liquidity as an FTA. Use this one. Don't even think of this one. Simple logic. We shall use these ones a lot in intraday. You just need to make sure you master them. Your role is to mark the open and close. Study the structure. High probability setup. Did I mark a weekly candle? Weekly candle, the best setups will be in the 4 hour areas. If it's a daily candle, the best setups will be in the 1 hour. The best setup. If there's nothing like 1 hour, you can use 4 hour. Are you together? Understand the behaviors of those candles. Most important thing, understand direction. What is price doing? Yes, I know price is here buying, but what is monthly speaking? Monthly is saying bulls. Out together. He's saying bulls. Out together. Now, it's the same thing like I told you. Someone can start wondering, where did such buys come from? These ones. What price ignore this guy? Let me show you. It's the other concept that I told you. If you don't have anything to mitigate here inside, price will just go through it and go to the next candle. This is a continuation candle, but price went through it and went to this one. Monthly connects more with the daily. So if you go to the daily, We'll go to the daily. We have this daily area of liquidity. This one. That's why price performed the other cycle. H1 shift with inside formation and bought for it is buys. This is the daily candle. This one had to go through it, though it gave you also here opportunities here. Don't forget it gave you opportunities for buys for quite some time. But then later price went through it. Why? Because the candles for daily had started shifting, and this is a daily continuation candle. This one. That's why sellers came in. If you remember where these sellers came in. So then price went to the next candle producing. Now the proper one that price should be respecting, it is this one because daily shifted with an area of liquidity. Don't forget that. Even though this monthly candle decides to come back for sales, trust me, I will take care of my buys with high momentum. Then I'll just use daily continuations with weekly. Daily with weekly. You can't fail to get pips unless you have a problem altogether. So it will be easy by time. Let's first understand the ideology of each time frame at a time. Then it will be easy. I think that. For those who want to know where these sellers came from, the simple logic, let me do this for you. We have this daily continuation candle. We can go into the H1. Okay, H1, we can see that price closed bulls altogether. Price closed bulls. And these are the H1. So H1 V to V is so far, right? It is so far. Which price later, of course, came back to consume. So you need first go to the 4-hour because I can see you have something here in the 4-hour. So let's see how price came back to that point. I noticed that you have something there inside in the 4-hour. We have something here in the 4-hour, I noticed. So price tapped into that region because we have here flip. That's why price sold from there. So let's first do this. Let's first cut off here before this guy goes further. Okay, this is so delaying. Let me first show you something before we go further. Okay, let's do this. Let's first cut off through here. I want it to be that start investigating some of the reasons how price can't fail to give at least pips in your intraday key levels. So let's go into the H1s. Even though you miss such a trade, let's assume you'll mark the including engineering here. This is a flip level. Someone can see it. Here is a flip level in H1. Then here I can see something, what you call the camouflage. We shall learn it later, but it's okay. We have the flip level in that daily. For our supporting, daily supporting, we don't have something like inside formation. It's okay. Don't feel bad for it. So price has a flip level. Are you together? That one nobody can see. This is a bearish candle. Price produced some buyers, failed, broke down. So it was breaking down. So being H1, look for 15 minutes. What's the models that are here? So you go to smaller time frames, maybe 3 minutes. So you're understanding how intraday key levels are produced. Okay, that means you have to go to the 1 minute just to go and research something deeper. But that one you do it for your own selves. But then later you can go back here to the H1. Even though you miss a trade, don't say, I missed a trade. You have all the continuations here. H1 continuations, price closed bearish, so you take H1 stacking in. H1 stacking, H1 stacking in. Then remember, oh, price has shifted. H1 has projected from a Quasimodo, big time frame Quasimodo confirmation, you take it to. This is why I took the other sale that you remember in the free group, which I placed in the size 5, then I sold here. So if you go to 4, this is how it look like. See that? 4 will look like one simple candle. Price, why does price doesn't respect anything? Because don't have anything to mitigate, to go to this one. Remember the logic that we discussed above, then we start selling. Now you see you start having the continuations. You wait for the candle to close bearish for the 4 for you to trust your selling setup. Are you together? Then you start selling. Price starts to sell. Imagine, all these are continuation candles for your 4 hour to continue. Price creates for another continuation, price taps in. I see that. Look at all those continuations. Then you say that, oh, if you take a trade, you'll miss out. You don't miss. You take the continuation candles. See that. Price is never a problem. You see who's the problem. So you have to put in the effort to master your structures, understand them, then react accordingly. Even here when price is tracing, you can do the same altogether. You can do the same. Now, these sellers to come in that you know are due to this guy because you have a shift with inside formation that we didn't tap in. This is for FTA, but here you have an H1. Let me show you something. For those who want to understand where these second sellers come from, as I tell you, price doesn't leave any liquidity that it didn't consume. Remember the other structure that I told you in H1? Let me show you. This H1. We said we need to see at least a shift with inside formation. It is there. Where is it? In H1. It is here. See, this is a bullish candle. These are bearish candles. So this is the shift with inside formation of H1 with 4 FTA. So price will come and produce for you here sellers that you didn't. So if you go back to daily, it's the one that produced for you this longer term dude. This is the longer term dude. Let's push this guy here. I think this is the longer term dude they produced for you. Price doesn't leave anything untapped. So you may say price has, where is this sellers coming from? Now, for me, if I investigate, I notice, okay, this other previous daily candle produced for us this H1. Look at the momentum produced. So it produces this. Don't be surprised. Use H continuation again. This is a continuation for real. Know that you're going to take out all this liquidity. So, I've overfed you with a lot. This was from the validation. This is from the H1 shift with inside formation. So don't ignore those properties. Just like the way you're seeing these ones that you're seeing here for H1 daily, weekly. Yes, they may not be mitigated, but they can produce the heaviest momentum. Like this one that they had to come back to. Like this one. Like they had to come back to this one. Because it has a shift with an inside formation with weekly FT on it. So it has high momentum to push price back up to produce a monthly candle. Hope you understand why I tell you need to master those shifts. Now, the reason why price didn't hold up so long, let me give you another example. Now, this one. Yes, it gave you some pips too, but the candle didn't fully close, like at least 70 to 80% momentum to produce for us, and the inside stopped in 50s, which indicates that bearish power is still strong. And here you had unmitigated areas. That's why price produces for you those momentum to go to the next daily one. This one produces for us a cycle formation. But price will have to come back here. We shall see that in future when you learn candle, monthly candle, understanding altogether. But look at how this level is producing for all this. All that momentum just because of this one candle. Someone's looking here, then you have here another one, which is what you call the affirmative liquidation. The data shift is inside the formation. Some guys will be looking for sales here. For us, we say, we have here sellers that will come up here in the 4 hour shift with inside formation. It's an interesting world, right? It works in all assets. Don't worry. Today I've learned about daily. So let's end the lesson here. Shouldn't add you a lot. First, play with those daily candles first, and master those structures that I sent to you. Then you can learn how to take the trade. But thanks for coming, Ivo. Thanks for coming, Blessed. It's going to be easy, trust me. Elijah, Mike, such that now what you're learning today is that you're not going to take any V2Vs anyhow, especially for H1s. You take the ones that are inside the range, make sure they are not consumed, and master those structures. You'll start seeing them. Said, okay, this one we should use the FTA. Okay, this one we should use the 1 hour shift with inside formation. Okay, Let's have those proper, and you see price coming to you, going in your direction. So as I told you, if it's daily, don't hold trades for long. At least capture 50 to 100 pips, which are good. Don't try to swing. You get swing on weekly and on daily candles. Don't try to swing on daily. You shall only swing dailies if you know that price has left a weekly point or a monthly point. That's when we shall use those daily ones for swinging. Yeah, but you know that okay, now price has left a monthly key level. Okay, or maybe as if a monthly candle key level. And this means this price can has a potential to hold. Look at the behaviors of those candles, take advantage of them. That's how simple it is. If price is on a ceiling, be careful if you're trying to trade the daily candles. You get like on weekly ceilings, weekly V2V ceilings, monthly V2V ceilings, or daily V2V ceilings. Be careful there because price can decide to produce any momentum. If you see candle structure that's not clear for you, you wait for another daily candle to close. Or look at the previous daily candles to have the balance in your mind. If it's daily, use H1, 4-hour confirmation. If it's weekly, use 4-hour daily for confirmation. Just play with that back and forth. But then we shall first need to learn about the reversal candles very well to understand them well. But the next lesson, we are going to the chart examples of these patterns for intraday. You start seeing some of them. Then after that, you can go into the reversal candles. Then you go into how to trade the weekly and monthly, respective of them. Then later, you can go into the 4-hour and 1-hour. All right. So thank you. Keep a good day. So I won't send the recording. Yeah.
I just have a question, a quick one.
Mm.
When will the direction be useful? Because I think part of the problem, I personally am getting lost because of the
Uh, okay. I think the direction should only use it when you're trading the candle that you're trading altogether. There's nothing like
okay.
there's a specific time. No, specific time shall use it in the timing concepts of the monthly and weekly. But for daily, there's nothing like we have. As I told you, a candle direction can activate at any time. Price can decide to sell. You may have that set up for H1 shift with inside formation somewhere on that old daily
Mm,
candle. And price maybe it will come back in the next few 2 hours. My friend, it can come in the very minute. Something can spike it up, and price is funny. Candles can just move in one day. One candle can say to move the whole day, yet it had to move for the next 5 days. That's how funny price is. You can't easily know. Maybe you can find that
mm,
some guy came and maybe poisoned the minister of Iran, maybe with some rat poison from nowhere. Gold spikes up. You get as it is spiking, it's going to look for that candle where you're trying to look for an area. So that's what I'm saying. When it comes to getting your setups, mark them, leave limits there. Anything can
mm,
happen. You see, like yesterday, that gold that you marked for 30 minutes, which was okay, price bought from there. Price will produce for you,
mm,
there's no momentum because it's a 4-hour candle that you're trying to trade, the old 4-hour candle. But in terms of intraday perspective, it had to buy in that area, which I marked for you. That's why it bought today, gold from yesterday evening.
mm,
You get because
mm,
someone who had woke up in the morning, oh, the previous day, Tuesday closed bullish. Let me just look for the 1 hour, then you mark it. Now, when you mark that H1 in that old 1 hour, you find that has some bit of 4 FTA. That's good confirmation. You wait. If you leave at the limits now, imagine you expect that limit to be activated at midday. It got activated at around, was it 10 p.m. around there. That's when God decided to buy from that point. Imagine you're waiting for a setup from morning to evening. It can even activate in the next day.
mm,
Yeah, so that's when direction comes in. Like you can't know when to take the direction, but always to mark the area where you're going to take the trade, capture pips. When you finish to master all the candles, that's when you start, oh, now I can do direction. Or what you get. Like you understand, okay, if I took the monthly,
I get
uh,
it.
if I
Mm,
take now the monthly candle, I can hold this trade for the whole month.
mm.
You get that's when you say now I'm going to hold this
Okay,
whole
it's
trade for
clear
the
now.
whole month. If I master now the weekly candle and I get a weekly setup from it, which is a 4-hour area of liquidity with inside formation daily, then I know this trade I'm going to hold it for the whole week. That means we're going to take out this weekly high. You see it piecing up slowly. So there's nothing like understanding direction bias. Well, no, your role is just to interpret these candles. When can I take in the buys at my own interest? And where can I take in the sales at my own interest? As I told you, everybody can be right in their biasness, but one of you has to be taken out. Your role is, where is your setup located? You see, now we are trying to play with golden bars, but price is on a ceiling of a higher time frame. Anything can happen. If I'm on a ceiling, I can wait for candle confirmation. Simple like that. Those old candle formation, they'll produce for us setups for us to continue with the direction. I think it's clear now, eh?
Yeah, thank you.
Unless someone has a question, you can ask before I get off. Okay, but rewatch these videos to pick something. Eh? Just rewatch them to pick something. It's not hard. It's very easy. It's very easy. As I don't forget this, price hits new areas of liquidity formed in the current candle. Yes, price can respect them, but it may not hold them for long. Price likes the old areas of liquidity that we didn't mitigate. Or price likes the old V2Vs that are between the low and the close, or the high and the close. That's what price likes. It hates the new ones. New ones just use them for scalping. Because the reason why these new ones can hold is because maybe they're like in the 4-hour candle range, which closed previously. Hope you understand. If you see an H1 V2 being formed today, and even has above everything, it could be in the 4-hour candle that closed maybe the previous 4 hours. And that's why price will respect then later go through and got maybe to the other H1 for the previous day. That's how price fun it is. This one why price will respect the 30 minutes V2V for the current today. Why do this? Because it could be in the old 1-hour candle closure or in the 4-hour candle closure. So understanding the science behind all that. If you see that V2V is not in the old candle closure, forget about it. Eh? Forget about it. If it's not in any of those, it has to be between the low and the high. That's when to work out. And works out don't hold for long. Eh? Don't expect I won't hold this trade for years. No. Nowhere to exit. Like target the nearest high, exit. And don't trade every candle. Trade at your own pace. That's the mistake that I'm going to start battling with the majority of you here very soon. Some of you want to trade every time because you want to recover whatever you've lost. But go slow. All together. It is simple. Your role is to wait for the setup. When you see it, take it. If you don't see it, don't force it. Don't put out of mind. Because you're already in the climax. You're in the last class. That's what I use to survive. So as you learn, you keep on compounding capital, 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 such that even if some guy is giving a setup for sales or buys, you first see where is this buy coming from. It. All right. So thanks for the
Excuse
good.
me,
Mm.
Professor.
Yes, bless.
Now,
Mm.
we talk about the candle closure. For example, if it is a daily candle that has closed,
Mm.
should it be engulfing the previous daily candle to confirm the direction?
E-
Or if it is like for a bullish candle, for example, for like yesterday closing,
mm. Mm.
and it has not engulfed the other
Yeah, the other candle.
the other
Ah.
candle,
Mm.
would we still use that one to look
Uh-huh.
for
I
buy setups?
okay. That's a very good question. I think that's what I've also explained today. If you let me first share the screen here. How can I share the screen? I haven't seen my let me see this. Stop share. Okay, I think that's what I've explained today, but let me just repeat it for you very fast. I think you
I
came in
think I
later. You had come in late. You came in later, but it's okay. It's also in this video, but let me just explain it for you because someone may also have forgotten it. So what am I doing? Okay. Why can't I see my screen for the website? I can't see the screen. Mhm. Let me first remove the screens. Let me first close here some apps to save the dashboard. There are so many apps that were opened. Let me first do this. So that's what we call the behaviors of those candles. Let me first stop the share. What's wrong with this thing? So it is coming back again. So that's what I explained. So let me first share again the screen here. All right. So let me share again the screen. So you can see the screen, Okay.
Yes, yes.
So this is what we explained again. Let me do it very fast. So that's what I was saying, that you need to look at the previous candles. What is the structure speaking? What are they trying to communicate? Let me do this. What are they trying to communicate? So I may have this candle type or this candle week. So, and remember, I've marked this one as my close and a low. And I know, okay, this one, I have to make sure I only look for H1s. H1, at least having that type of a shift that you've just discussed about. Even if it's not a shift, but just stand H1 V to V, but has that bit of H4 property of FTA, it is okay. Are we together? It's okay. So now remember, another candle can say to come in on the next day and say to close like this. Even sometimes fail to close below, above the wick, like this one. It is okay. Are we together? Most of the time we find that, okay, this daily candle has been activated maybe by some H1 here that wasn't consumed, or maybe 15 minutes. And this day closed like this. I maybe had maybe 15 minutes V to V that wasn't consumed. So I think we'll watch that video what I was speaking about by being consumed. So then after another day comes in, another day can come in bearish. Remember, this means we are still in this daily range high, this daily range low, even though price is expanding. Remember now, this is what we're trying to mean. The price, the candle didn't fully engulf this one. Isn't this what we're trying to mean? It could even have closed by an inch altogether. You can mark this, but most of the time, for me, if I start seeing such candles, I wait for another candle, because another candle can just come in 20s for sales. So as it is for sale, this is another daily candle. You can even take here another daily sale candle for continuations. But they're just learning continuation candles. So I can mark this high and mark this close. So this means this daily candle continuation, this candle comes in, taps into this area, which could have had a 1 hour area of liquidity before our FTA, then price sells there. So when price reaches here, it will tap into that area. Another daily candle comes in. You have this type of structure. So when this candle comes in, it can even decide also to stop here, because candles produced in a different format. Okay. You see, it can stop there. This one also now becomes my new, because you may try to sell here, but price could be coming from this area of liquidity that is somewhere here in the H1. Remember, even this one can also be producing for H1s with 4 hour areas. This is another daily candle. Maybe it had a long wick tapped into an area of liquidity with liquidity engineering. This will become now my new area of liquidity. So when another candle comes in, maybe opens, it can decide to buy, then later comes back here inside. And leave here candle wick, because you have here another H1. If you don't have H1, you can have there a 4-hour, then price buys. Now, an ex student, he will see this as a V to V. And yet for you here, it has been a battleground. Are we together? It has been a battleground. Here, you can even start taking some buys in this old one to produce for you these candles week. Some of the buys could be here inside. Maybe some H1 which didn't mitigate price buys but fails to close above. Produce for you here sellers with some H1 V to Vs. So price comes, this candle comes in, taps into that H1, sells. Now remember, this candle also have an area that you didn't mitigate. You understanding the sense? So again, this H1 comes, creates this low within this daily candles. Price comes, this is another H1 which has maybe some 4-hour FTA something. Then price comes, taps in, then another candle comes in, taps in, creates maybe another H1 here, and price starts to go high, respects this one, and maybe doesn't come back to this one, then later comes back in future. So an ex-EC student will come and call this one a V2V, try to look for a higher time frame overlap. Then for you, you've been capitalizing on every buys and sells for intraday. That's why it's easy to do intraday every day. And don't stick to one asset. If one asset is confusing, go to another asset, but make sure in the right direction. Brace, is this understood?
Yeah, it's understood. So we don't need to look at the direction we trade candles now in this case
Yeah, we can
for
trade candles.
intraday.
Yeah, yes, you can trade candles, but make sure you're trying to follow. First, get to know what is the daily candles, because price can be doing this. This is what I explained in the beginning. This could be daily V2V, right? But you find that the daily candles are buying. They're waiting for those continuations, like these ones. They're together, waiting for your continuations. These are all daily candles producing for you continuations. It's important to know direction, my guy, because this could be now a pullback. Remember, these are these are sellers coming in here first. Even the sellers, you can take continuations. Don't forget that. Maybe now a reversal, we need to see at least the candle closing above the gap here. This can be a derivative to this one, all of it together. But as data is getting back inside, we can use these areas as for continuations. Continuation into some H1 here, or with some 4-hour inside here. See, price taps in here. Then we have here this other area. Price comes and taps in here. Then this other area, another candle comes in and taps in here. So when price approaches this area of liquidity, also for this other daily one here, this big area, you're not going to just mark liquidity. You can mark your liquidity, it is okay. You can take trade here. But for most advising, I would love to see at least another daily candle comes in. If structured hairs, let me show you something. Let's first do this one. Let's assume we've been taking all those continuations. So the reason why you're taking this continuation, they can save you from instead of taking liquidity engineering. So if I know that now prices on a daily area of liquidity ceiling, it can be daily, this can be weekly altogether. Direction is important. So you know, okay, price doing a pullback, I can take in the buys. This when these structures can happen, they can create this structure of this caliber here. You may not create candles of the same color, but can create this type of a structure before hitting back here inside. So in reaches here, I'm not going to take here sell anyhow. I can only wait for a daily candle to come here and close bearish. And when it is closing bearish, that's why I didn't want to today about reversals, but I need just give a hint. We just have to make sure the candle closes below this gap here, below this previous open and close. Why? Because remember, the sense of this formation of these candles, bullish candle opens, creates the low, which is this week, goes, creates the high and closes. This can be formed in H1, right? Either or in H4. Then this other candle, when it is coming in, it also opens, creates the low, creates this high, and closes. Now, this bearish candle, when it is coming, why am I saying that it's important for price to close below here? If you know it doesn't close below the wicks here, this wick of this candle, the body should be at least closing below this gap. So when this bearish candle is coming to open, create the high and close below. So if you observe, at first this was like a previous V to V, which was the validation and invalidation, which is somewhere here. Validation and invalidation. So price goes through it. This can be 4-hour price goes through it. So it's using this is creating for an area of liquidity, which we shall take by another candle coming in. So this candle will come in buying just to tap into this area. Buying, then taps into area, then starts to sell and leaves the long wick. I think that when it does that, that's when I will start taking also other continuations. I hope I'm making sense now. So price comes, taps into this area because we have maybe some H1. You see, now our role is always entering from here. So if you observe all the entries that I tend to take, I take them based in this area. And this is when, if I see this thing happening, it kind of closes below the previous gap. This when you start seeing all the cycles happen here. 4 shift with inside formation, H1 shift with inside formation. That's when you see them. You get. It's more or less like engulfing. All together. Now, when price maybe reaches here on the support, if we have nothing, if we had here maybe something we didn't mitigate here inside, that's when you see maybe another candle coming in for bulls somewhere here. Price starts to buy. Now, when it starts to buy, it's another swing point. We shall learn it very well, understanding reversals with swing points. So our playground will be here for continuations, continuations. We select here buys, buys, and our buy should have at least an H1 as we've learned today. We can have several inside formations with 4 FTA. Remember, I've learned today 4 scenarios of shifts with inside formations. So these ones will always happen in those time frames. Blessed, I'm understood there, right? So this one another
Yeah, you understand.
continuation. This one another candlestick comes in. You mark this low, you mark this high. Haungafande day, wait day. Get.
Because I was looking at GU how the weekly candle closed, but the deal had not shifted.
Hey,
I was now looking at should I continue with the buys?
remove this. Now, that's why I'm saying let's first master the daily time frames. Then we shall understand how to trade the weekly altogether. Now, I know that weekly is ready. Now we're doing the weekly seeding here. Let's do this. Okay, let me give you a small sample. Okay, now this is how we trade the swing points. Let me just give you a small sample. Now, I can see candles of the same color drop. Twan, 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 twan. Then I wait for this bullish one. Oh, it has closed bullish. Now, this being weekly, I'm going to go and check 4-hour. Because I know we are going back up. What do I see in 4 hour? This one, I'll see my cycles happening. 4-hour shift. I think that with an outside formation. Okay, now let's assume you're looking for daily FTAs. For someone who may ask, oh, I want to see daily FTA. There's nothing in daily FTA. But what is supporting the ideology is that even the daily candle closed bullish. Like the other scenario which I told you, brother, you see, this is a daily candle. Let's assume even, okay, let's first finish with the weekly before I go further. Don't want to take you deeper so fast. So I know, now this area is going to produce for me another weekly candle, long position. I know we are getting back into some weekly area of liquidity here inside. If you go back to one week, this is how it would look like. I'm getting back here inside. So if I go back to the 4-hour, you're going to see the next candle for weekly is formed by that full. So now, if I go back to my weekly, let me first pause here. What do you see? It's the weekly candle that you've just formed here. This weekly candle that you've just formed. Remember, this is replay. Replay is showing that this thing reached here, but let's first take it forward very well and we see. Let me mark it for you very well, to understand the science. Let me first mark for you very well. So if I mark this high to this low very well, this is the area which will be producing for us this weekly candle that is coming in here. So if I mark from here to this low, but here, of course, if you go to H1, you shall find here, we had here H1 shift with the Quasimodo. We shall see that later. Let me first show you something. How this weekly candles low was produced. So if you go back to weekly, so you can see that this is the weekly candle that we produced. It's the weekly candle that we produced. Now, if this weekly candle closes, let's assume, did it close? Let's see. Now it closed. It later closed bullish. Now this one, I'm going to use it as my weekly continuation. So if I go to 4 hour, what do you see in 4 hour? At least we can see we have here a 4 hour shift altogether from here. But what do you see? We have here this inside formation together. But price failed to hold altogether, so you don't feel bad. But if you observe clearly, we can see that we have here at least a proper 4 hour big shift, and we have here this inside formation, which should be producing for us the next 4 hour area of liquidity. But for betterment, we shall see that how to play, how to trade with this guy. We need first to go to the daily. And daily, what do we see? We see some bit of daily FTA altogether, daily FTA. Even this one is like a daily shift with outside formation. It can produce for you a momentum, but I don't have here a clear 4 hour structure for inside formation. So if I go back here to the 4 hour, we can see we shall have here the best 4 hour area of liquidity. Why? We can see 4 hours shifted from here, but with a very good inside formation here. Let me show you. Higher high, higher low. So I have this inside formation. It is clear with the daily FTA. This one up, yes, it will also produce for you some momentum altogether, produce you some momentum, but it's the best one to take in the next, this weekly candle that is coming in altogether. When adding the timing concepts, it's the last week of the month. So the best areas of liquidity to produce for you the next monthly candle. The other two monthly candles are produced by derivatives, which is going to be here. So the next monthly candle can be produced from here for buys. We shall see that understanding weekly and monthly. Now, even though I didn't use that weekly, let's first go back to 1 week. When I didn't use this weekly, trust me, even this weekly buy to come in, let me give you an example. It comes from this old weekly V to V. That's why for me, if I say an old weekly V to V, I don't rush. Don't rush. Wait for a candle to close. You see? So imagine working here for Quasimodo. What happens? Price takes you out. You would have waited for at least a bullish candle to come in, like this one. Together. Even this one, if you want to take in the sales here, from this V to V here, wait for a bearish weekly candle to come in here inside this range. Sorry. These things, if you notice by the time, it's just common sense. What am I doing? Okay. What was I going to do? Put it in line chart just to mark the proper V to V. So I mark this because brokers will produce for you funny candles. Don't forget that. Don't overly rely on Owanda. Check on other brokers like FXM or Owanda, then Xness on your phone, or the broker that you're using on your phone to have proper clarity. I think that. So here, even here, I can wait for a daily, weekly candle to close. When it closes, that's when I look for 4 hour shift with inside formation and I play with them. Master those scenarios that we discussed about. They will produce for you what you want. So let me give another example. Let's go to daily. Let's go back. Let's assume we didn't get this weekly thing, but you want to use daily. Now, the logic of swing points, we need to see a candle closing below. Let's first do this. We need to see candles. Do we have any nearby break of structure? Yes. We have this daily break of structure here down. This is also a swing point, but it's not a good swing point. Why the candles struggle to close above the gap. That's why price, and it was closing above the gap, it has already entered an area of liquidity, so it was useless. So the candle closed from here below. Here it didn't close below, but at least you have a break of structure. So now here, if you observe, this was the bearish candle, but we have here a pin bar. This is a swing point. Pin bars, we mark them like that. But before even this bullish candle, this one doesn't have something like a gap opening or something. The gap was later closed from here above, this one. But here you had a pin bar. Before this bullish buy, so if you go to H1, sorry. Okay. Now in H1, we can see we had here a shift with inside formation. Here. Check this. Here. But price didn't come back. Are we together? You don't feel bad, eh? Don't feel bad. It will be used in future. Remember the other scenario which I told you guys? Remember this one. Remember this type. Check this one. Shift. This one price had mitigated 100%. This one price stopped on the validation. So here's my potential area of liquidity. It is this one. Because price only tested the validation. We didn't consume this one 100%. So when price comes back, it will come back and test 100% of this key level. Together. But price didn't come back. Why? Because we have here, we shall learn that scenario too. We have another scenario that I discussed about whereby a candle doesn't enter 50% of the candle, but stops somewhere here inside because of the candle. So here you shall find 4-hour candle closed bullish. So if you go to 30 minutes, blah, 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 you'll find there's something. But you don't feel bad. Remember, I'm using daily. Daily didn't come back. The daily later closed bullish. The daily closed bullish. Now, by the daily closing bullish, we mark this low, we mark this high. Now, my role is to look for the H1s that are here inside. What do you see? We can see an H1 had shifted from here with a big inside fat formation here. I think that's the area of liquidities between the low and the close. So now I go back to daily. Now here I'm going to mark my liquidity engineering. So you can go to the 15 minutes. So I can decide to mark this as a flip level. I can mark this as a liquidity engineering. It's all your choice. Entry is the choice. It's up to you. You can say, for me, most of the time I tend to miss here, guys. Let me just mark here. But if I'd marked this one, you could still get your trade. 20 pips stop loss below. Don't set 1 pip. No broker will allow you to have 1 pip. It's just chance. Because broker spreads can't allow you that. But I always find guys, that I used to teach in XEC, trying to keep a 1 pip. The broker is going to mitigate you. You liquidate and start complaining, and price goes in your way. 20 pips, don't copy the inventor. If you want, you can. Now, this is what we are discussing about with the Blessed. This is what he was asking about. Let me show you. So, now this is what we discussed about. Check. Now, imagine if I had set the Quasimodo, you wouldn't have got this trade. Are you seeing that? Even though you come back here. But maybe it would have come back later in the other 4 hours that we discussed about. So this is what we're discussing about brace. Check. You see, this candle failed to close above. It can take days to come back into this range to start buying. So someone who had come back, hope you understand, this is day, another day, another day, another day. Then another day soon it rises up. That's why it's not a must for price. But remember, it's getting back inside. It's also mitigate. This is a bearish candle, closed bearish. Then that produced for you these sellers. Then these other sellers are together. Then later the bulls will remember, oh, that we are in a bullish range for buys. You see, I'm playing with those concepts. So if you go back to H1, this is where your buyers come from. In this H1 here, H1 V2V. So instead price respected the flip levels that are here. So if you're marking the Quasimodo, price didn't come back. But rate, of course, it came back later because here we had a big 4-hour V2V. Are you together? That's why it came back, which produced the other weekly. Don't forget. So price comes, taps into the flip for this H1 shift with inside formation. Price taps in several times. You have to be patient because it's H1. Remember, H1 is taking all this out of time. So if you're not so strong, is my screen pausing? Stopped. So if you're not strong enough to hold, check this. These are several hours. So you have to be so strong, trust your setup. But these are days. This is another day, producing for all these sellers. Are we together? That's why you had all that struggle in between. But if you go back here to the daily, you can even take those sellers, those selling trades. For someone who has a keen eye, trust me, those sellers don't come with no reason. They come with no reason. Now, this day closed bullish, but now this day also said closed bearish. Let's see where these sellers came in from before that day, before these buys coming in. Let's first cut through here. Now, this being daily, so if you go to the H1, now H1 you can see we have here an area of liquidity. But this H1 area of liquidity has no inside formation, which indicates that it can be some type of FTA, but had here also its own shift with just a normal area of liquidity. So if you go maybe to the 30 minutes, can find there an area of liquidity. Instead, I'm playing with those concepts for these guys. Now check. Here we have a bullish candle. Now this block I was hiding. Here have an area of liquidity that produced for you these sellers. Price first tapped on the validation. So if you can't see them clearly, go to 15 minutes. You see that in that selling area. Price taps in here, taps in here. They don't come with no reason, eh? They come with a reason. Even these bars to come in, they are due to the other daily candle that closed bullish. It's how price is it's so magnetic to whatever it likes. So you have this other daily candle that closed bullish here. The one that produced bars to tap into this selling area. Then you say trading is hard. Now you see H1 shift together with an inside formation here. Though it wicked in so deep here, it wicked in so deep due to the other affirmative which I told you about. So price comes in, taps in, buys, then later sells. But remember, bulls are the ones in control, then later buys. You see that? So you can even trade a ranging market by just using those previous candles. Hope now I'm making sense. But I shouldn't feed you a lot. I think I blessed have understood how these candles play around.
I've understood.
It will come in naturally. It will come in naturally. Even these sellers, you can get them. Even this next buying candle, you can get it. Even these buyers that were rejecting here to buy are due to this buying candle. Even these sellers that are happening, they're due to some old areas that we didn't mitigate here inside. Maybe some H1s that we didn't mitigate together. This selling can't come in because you have here some H1s. You see that these sellers can some H1s between the low, between the close and the high. Even these buyers, you see that. You see that. See that these sellers, these buyers, you start seeing some of those things by time. You start saying, oh, okay, now I can see something. Now that's how the weekly candle is produced. By adding the timing concepts that the month is about to close, price can start to come back to this daily altogether because even it has some daily shift with an inside formation. It has two inside formations, and that's scenario which I told you which can produce the next monthly buying candle. So it will be easy for us to capture. So if you go back to the 1 month, this is how this shows. This monthly candle is not yet closed. So someone who's waiting to trade the monthly candle, he has to wait for the monthly candle close. If the monthly candle closes, that's when you shall look for the daily shift with inside formation, which can push us back here inside. Imagine a position trader is going to wait for the monthly candle to close. Never joke with the power of what we call the close. Okugalao. Okay, I think I've said enough. First master the other stuff, then it will be easy. But thanks for coming. The video is going to be sent in the group. Rewatch, master those structures, those 4 scenarios of shift field inside formations. They are so common. You will capitalize them at any time. The one who wasn't ever seeing inside formations, you will start seeing them over and over, over and over, over and over, over and over. Good. All right, let's win, guys. Let's end it here.
Yeah.
Okay.